Good morning to our viewers and our participants. I welcome you all to this webinar titled Economic Stabilization Bill, a Blueprint for Tax Reforms and Economic Stability. I welcome you all. This webinar is germane, as you all agree with me, the ongoing tax reform and fiscal policy in Nigeria, where CITN is one of the major stakeholders and contributors to the current bills that have been submitted to the National Assembly. This webinar is also approved by the 16th president of our great institute, Mr. Samuel Agbeluyi, MNI, FCTI. Without wasting much of our time, I will introduce my boss who are on this call to every one of us. I have by my second left the vice president of our great institute, Mr. Innocent Oagua, FCTI. You are welcome to this webinar, Sam. I have to his immediate left, Mrs. Afolake Osho, FCTI, the registrar executive of our great institute. You are highly welcome. I have next to her, Mrs. Runke Ojo, Director, Corporate Affairs and Internal Services. You are welcome. And next to her is the Deputy Director, CITN Tax Academy, Mrs. Sulaiman Yetude. You are highly welcome. And I come to our lead presenter for today, Alhaji Aziz Alatoye, FCTI. You are welcome. We have our other contributors. We have Mr. Yomi Olugbenro from Deloitte. I welcome you, Mr. Yomi. I also have our chairman of section, Dr. Mark Abani. I welcome you. We have the executive chairman, Enugu State Internal Revenue Service, Mr. Emmanuel Inamani, FCTI. I welcome you. We have executive chairman, Kano State Internal Revenue Service, Mr. Said Abubakar. You are welcome. We also have executive chairman, Plateau State Internal Revenue Service, in person of Mr. Jim Pam. You are highly welcome. Without wasting much of our time, the president is ably represented by the vice president of our great institute, and will be giving the welcome address of the president of our great institute before we commence this workshop. The VP, sir, you have the floor. You are welcome.
Good morning, distinguished ladies and gentlemen. I would have stood by the protocol, but I will need to select my elders, salute them for sparing time to be with us this morning. Our assistant president would have been personally been here, but at a very short notice, he was called for another assignment. So I extend his greetings to all of us. I recognize the lead presenter, Alhaji Aziz, who has been doing much for the Institute. I say thank you, sir.
Thank you very much, sir.
I recognize Dr. Abubakar Zaid, the Executive Chairman of Kano State Internal Revenue Service and a council member. I salute you and welcome you to this program. Our great boss, Mr. Yomi Olugbenro, the partner, Deloitte West Africa. I salute you and welcome you to this call. Our own Dr. Abani and the coordinating dean of CITN faculty, I salute you and welcome you. The executive chairman of Enugu State Internal Revenue Service, Emmanuel Namani, I say good morning and welcome to this call. And our executive chairman of Plateau State Internal Revenue Service, Mr. Jim Pam, I say good morning. And for all distinguished members of our institute on this call, I salute you. By the authority of the 16th president, I wish to read the address to this great gathering. Distinguished resource persons, esteemed professional colleagues, and ladies and gentlemen, it is with great delight that I, on behalf of the Council and Chartered Institute Organization, CITN, welcome you all to this webinar on Economic Stabilization Bill, a blueprint for tax reforms and economic stability in Nigeria. I thank you immensely for your presence here today and shared dedication to advancing the ideals that underpin our profession. As an institute that prides itself as a knowledge-based organization, continuously learning is key to our role in shaping the professional landscape of taxation, not only in Nigeria, but in Africa. This is why we have put together this seminar for members to come together to review and understand the intended and unintended consequences of these very important bills. Distinguished professional colleagues, today's discussion could not be more timely. The Economic Stabilization Bill, as you may already know, seeks to address some of the deep-seated challenges in our tax system while setting the foundation for a resilient and inclusive economy. The current tax climate, coupled with national economic challenges, demands a reimagining of our fiscal strategies. These bills offer us a vital framework for critical reform. As a tax professional, our role is crucial. We are not just observers, but active participants in reshaping the tax and fiscal landscape of Nigeria. We must critically examine these proposed bills, provide well-considered insights, and advocate for measures that will support both the government objectives and welfare of Nigeria. Let me take this moment to commend each of you for your steadfast commitment to the ideals of the professionalism as part towards the Institute. It is your expertise, diligence, and high standards that position us to influence policies and derive meaningful economic reform. I urge all to remain unwavering in your professional duties, to embrace opportunities like today to expand your knowledge, strengthen your influence as tax professionals. Before I declare this technical engagement open, I must commend the coordinating dean, CITN Tax Faculty, Dr. Mark Abani, FCTI, and indeed all members of the respective faculties for their contribution towards the success of this remarkable webinar. In this same vein, I extend my heartfelt gratitude to our resource persons and all participants for your active participation in today's webinar. Your commitment to continuous learning and professional development is commendable, and it is driving force behind success of events like this. Without much ado, distinguished professional colleagues, esteemed facilitators, ladies and gentlemen, it gives me immense pleasure to officially declare open this webinar. I wish everyone a fruitful and enriching experience. Thank you, and let's make this session a truly impactful one. Samuel Agbelu, MNI, STI, the 16th president of our institute. Thank you very much, and God bless you all.
Thank you very much, our dear VP, for the president opening remark. We appreciate you, and without wasting much of our time, I'm going to call on the chairman of section, Dr. Mark Abani, to take up these proceedings from here while I return after the presentation. Thank you very much. Over to you, Dr. Mark Abani.
Thank you. Thank you very much. Thank you, my 16th president, ably represented by the vice president, and all my professional colleagues. May I stand on existing protocols given time constraints? Although I will still mention some people. You're all welcome, has been said by our president, to this very important webinar. This is accumulation of a committee that has been led by Alhaji Aziz, who is actually our keynote presenter today, and was made up of quite a number of members, both of the various faculties, but also very, very learned gentlemen and ladies of the CITN. So first of all, thank you very much to that erudite committee, which has drawn together the views that CITN has been able to put forward and put our position out there. This is a unique position in our times. It's very difficult times, and it requires radical solutions. Our member, Taiwo Yedele, has always espoused some of these radical approaches and has had the opportunity to paint the tapestry on which we are discussing and which may eventually go forward to form the stabilization of our country and the renewed vigor for taxation. I'm not going to go into the details that Alhaji Aziz will cover, but just to remind us that there are 4 tax bills we're discussing. The Nigeria tax bill, which actually brings together a number of existing tax bills, income tax, corporation tax, PPT, and so on, and repeals the existing ones. The tax administration bill, which seeks to put everything on a level playing field across the country. The Nigerian Revenue Service Establishment Act, which replaces FIRS, and some key aspects of FIRS have been taken to the Joint Revenue Board, which is now formalized, and also the Tax Appeal Tribunal, and indeed the introduction of a new system. As I said, I'm not going to go into the details. We'll have a chance to talk about all of them. However, as was eruditely put forward by Mrs. Osho, our registrar, when they were pulling together this document, is that success will depend on the effective implementation and strong political will that we're seeing. And key emerging issues have included the strength, or rather the lack of a strong social contract, which is the basis for legitimacy in collection of taxes, issues that are arising from the unique fiscal federalism of Nigeria, playing out in terms of approaches and understanding or misunderstandings around the VAT sharing formulas, and a number of other issues. These will we go through. However, it is a bold and radical change that is needed for our times. I know Alhaji Aziz, on behalf of his team, and our contributors, our panelists, will do great justice to this bill. It's very important. The devil, as they say, is always in the detail. I will hand back now to Dr. Ayodeji, who will act as compare. I don't want to say MC because that doesn't have the correct level of gravitas for the job that he does, as he leads us through and make sure that we capture our questions, answers, and comments as we go through. Again, please, if you can, put these in the chat box as we're going along so that the panelists will have an opportunity to come back and address those. And Dr. Ayodeji and his team will be taking care of this. Thank you very much, my learned colleagues, and back to you in the studio, as they say. Thank you.
Thank you very much, Dr. Makabani, for the overview of what we are expecting to hear from our lead paper presenter. And we are going to run through this section for 2 hours. We'll give Alhaji Alatoye 1 hour to go through his presentation. And we believe that within that period, Alhaji will finish the presentation. And after that, we'll go to our discussant, one after the other, 15 minutes for each and every one of them to add to what Alhaji must have presented, bring additional views for us to collate. Then before we now go to general questions from our participants. That's how we're going to go. We will not waste much of our time. We want to make sure we finish by 1 p.m. for our members to be able to attend to other issues that they need to attend to. And I hand over the proceedings to Alhaji in the next 1 hour. Over to you, sir.
All right. Thanks very much, Dr. Ayodeji. Let me start, by recognizing our 16th president of our great institutes. Our vice president, I do recognize you, the registrar of the institutes, the coordinating chair for all the deans, and Dr. Ayodeji, I do recognize you, all distinguished discussants, as well as all the distinguished members and non-members attending this seminar, as well as our press people. I do recognize you all. It's a great pleasure, and I must thank the President and the Council for giving us the opportunity to review the economic stabilization bills, these 4 bills. I must say that I need to acknowledge and thank our coordinating dean, Dr. Mark Abani, first, with respect to the ad hoc committee now, and then before going into this presentation, because he provided a lead, information. He provided lead information with respect to the direction, of the discussion, which all the members found very useful. I must also admit that I'm not the best among the people to really coordinate, and that's why I have to thank the president and the coordinating dean actually was to coordinate, and he said, okay, I should coordinate, which I was happy to do. I must recognize the members of the ad hoc committee. They are very powerful individuals who have passion and love, for this country. Everybody have their opinions, but at the end of the day, we have to agree on the best opinion for the institute. Among them, our current chairmen, who are right at the center of the government. They know where the shoe pinches. We have the federal authority within the ad hoc committee. We have the state internal revenue service within the committee, which Dr. Ayodeji had already mentioned. And we also have past chairmen, within the committee, those who have residual experience. In fact, we have someone who is a double chairman, and all of them have been a member of the Joint Tax Board, discussing issues of our great nation. And, it's an issue of balancing and the issue of the rules being set right. And so the Institute have to take a leading role in discussing, a taxation matter. And this is why all these eminent people are pulled together, for us to look at the 4 bills and being able to, come up with some recommendations. Now, let me say that we all, read these 4 bills, and, we have breakout sessions. So what I'm going to be going through is not a product of my work. No, it's a product of the work of the ad hoc, committee, to the institute, which our president, as he deemed fit, is going to extract, what we need to present, to the National Assembly for the public hearing in respect of these bills. So I'm going to be very brief. And because there are discussions to also look at some of these areas, we firstly want to commend the committee, the national committee that really put these bills together. And that is the Fiscal Policy and the Tax Reform Committee, led by our own Mr. Taiwo Oyedele. They've done a very great job. We must commend them. In fact, in collapsing almost 64, tax laws into just like 8 chapters in the tax bill is a great work. We must commend their efforts. And what we are trying to do now, we've gone through the bills and we agree to a greater extent, with the bills. However, there are some areas where they probably will have taken certain positions, and we as Nigerians, feel that, do you want to have a second look, at these positions? So the way this paper has been structured is broadly into two. So within the next 1 hour, the first maybe 20 or 30 minutes, I'm going to go through the issues that we picked and we think, the National Assembly now need to have a second look at. Mr. President had already said, Mr. President of the Federal Republic of Nigeria had already said that the National Assembly is saddled with the issue of looking at bills, to which we positively align, because the National Assembly will now start taking those sections of the law, and look at them and come up with what it is supposed, to be in their honest view. So I think everybody is working in the interest of the nation, and this is the way, we see it. So I'm not going to go through all the bills. It's not possible. Having commended the committee, that is the fiscal policy and the tax reform committee, led by Mr. Taiwo Oyedele, what we've done is that all the aspects of the bill that we agree with, we don't need to re-emphasize those ones other than to thank them for that. Now, what we've done is just to select some few bullet points of the one that we think they need to, have a second look at. And that is the direction we are going. So having selected those bullet points on those 4 tax bills, what we did was to also profile suggested, solution from the Institute, perspective. And the position we will be presenting is, the position that the Institute will be canvassing. So I want us to listen very attentively so that we can also, contribute, very meaningfully to each of the points that we will be raising. Now, as I said, I've divided the paper into 2 broadly, but by the table of contents, what we have is, introduction, which I've already, been doing, the critical components of the bill. Then we will be engaging in the stakeholders' concerns, and then conclusion and recommendation. I will want all members of the ad hoc committee, especially our chairman of the various internal revenue services, of the Federal Inland Revenue Services, and the private sector that were at that session to please, contribute significantly during the discussion session. So we will be looking at all these 4 areas. So by way of introduction, we have said that recently the Presidential Committee, on Fiscal Policy and Tax Reforms, headed by Mr. Taiwo Oyedele, presented its reports to the President of the Federal Republic of Nigeria, His Ex-President Bola Ahmed Tinubu, GCFR, who in turn presented bills to the National Assembly, although the bills contain 2 documents, but stand on a quadruport bills, namely. What we are seeing here that there are 2 documents, and I have those 2 documents here. One is standing alone, which is the national, tax bill, and then the other 3, which are there in the other bill. So we call it Economic Stabilization Bill, for the Federal Republic of Nigeria. And so the first one is the Nigerian Tax Administration Bill, 2004. Because if we have to get everything right, you must get the administration right. The next one is the Nigerian Revenue Service Bill, and that has to do with the Federal Inland Revenue Service Act being repealed and now translated to the Nigerian Revenue Service Bill. So we have one agency at the federal level collecting, the federal taxes rather than proliferation of those taxes. We also have the Joint Revenue Board Establishment Bill, 2024. This also is going to replace the Joint Tax Board with some recommendations there to really strengthen our tax system, as one entity, but recognizing the federating units of the entity. And the last one, but not the least, of course, that is the technical, bill, which everybody will keep on, like almost punching themselves. No, you didn't get right. I get it right. No, you are not correct there. And that is the Nigerian Tax Bill 2024. And in that tax bill, you have 8 chapters there. And those 8 chapters is what I will say now the consolidation of all the, tax laws, that we have in the country. So the first chapter, deals with the objectives and then application, of the bill. The second chapter, which is chapter 2, deals with taxation of income of persons. Let me say that persons here also, it's both individuals as well as companies. And that section is what we have in there. So unlike before, when we have, companies income tax and then personal income tax separately. So you now need to focus on income, and that's what we are taxing. So how do we tax income of companies? How do we tax income of partnership? How do we tax income? To the extent that it is an income, that chapter deals, with that. We also have the taxation of income, from petroleum operations, and that is chapter 3 of that bill. So here you will have the chapter 4 of the Petroleum Industry Act, now being imported, into this bill. And again, you also have some other ones like the deep offshore inland basin production sharing contract, some part of those. And then also keeping in view the grandfathering of those other acts, technically repealed, but they are still running, so this act also do recognize, that, because that was the basis of agreement with the investors in those days. And so Nigeria still continue with stabilization clauses to make sure that those contracts are still maintained under the sanctity of contract basis. Now, chapter 4 deals with the, double taxation. That's relief for double taxation because Nigeria have a, double taxation agreement with quite a number of countries. So that section, is the section that is going to be a continuity of what we know to be section 45, for example, of the companies income tax, recognizing, those tax treaties. And then we have chapter 5, which deals with dutiable instruments, stamp duties, on the instruments. We have chapter 6 that deals with the value-added tax. I think one of the most controversial ones, of course, but we as Nigerians, we need to be objective, and as much as possible in having a landing on the value-added tax. And chapter 7 deals with excise duty on services, which is on, some products. And finally is the tax incentives. So this tax incentives deals with the issue of, like pioneer period, which will replace what we know to be IDITRA, Industrial Development Income Tax Relief Act. So that's going to be a replacement to that, as well as other reliefs that we have in CITA, reliefs we have in, Minerals and Mining Acts, reliefs we have in various acts being consolidated under tax incentive chapter. So if we look at it, I think the first thing we need to thank the fiscal policy and then the tax reform committee for is in being able to reduce, all those taxes into a very short list. Notwithstanding, we know that Rome is not built in a day, and it's going to be a process. There have been a lot of thoughts that goes into the process before arriving, at this bill, and that thought process will continue. Here, the Institute is trying to, provide very good information to the National Assembly, and at the National Assembly too, there's going to be a lot of brainstorming. But at the end of the day, let's pray for and hope for the best, to come out. So after a critical review of the NBT 2024, one must commend the effort of the Presidential Committee on Fiscal Policy and Tax Reforms for the development of the blueprint that seems to be fair, to all. That's our honest view. I know some people might say, no, it's not fair. That's a personal opinion. There is nothing we can do about that. Everybody, and even those who say it's not fair, is a degree. Some people will say it's fair. Some will say to 100%, it's fair to 70%, it's fair to 30%, it's fair. Some will say, well, nothing has changed, that is 0%. Some will say it's not fair, at 10%, it's not fair. And some will say it's not even fair, 100%, So that's the way people's view are going to be. But we must, really commend the people that put the bills together, because I think they've put a lot of things into consideration, and it's really about balancing in life. You can't really not balance things and then satisfy everybody. We just have to dialogue and then put it where we think it's going to be helpful, to the country as our drive. So, and that's it. So now let's go to the first item there, taxation of income and then relief, for double taxation. We shouldn't forget what I said earlier on. So what we did was to identify some areas that we think there are going to be challenges in the administration of the Tax Act. So that is the one I will quickly run through now. And then after that, I then come to solutions to each of these items. So I first want to focus on what we extracted from the bills, and then thereon, then put what our own proposed suggestion should be. The first idea is on the presumptive taxation, which is in chapter 2, part 7, section 29, to be very specific. And it was observed, that the provision is not really in tandem, with the Constitution of the Federal Republic, of Nigeria. So what do we mean there? That the law imposing it, shall be enacted by the federal government, to a state, and not really the minister. What we are seeing on the presumptive tax here is that the provision there is that presumptive tax should be centralized, and the Minister of Finance or minister, with respect to taxation, is going to be the one enacting on presumptive tax, probably fixing that, on presumptive tax, like a mechanic, those people who are artisans generally, they should pay a certain amount of tax, and then they will fix, like, say, 2,000 naira or something like that. And how do you ask a minister to fix that? If you ask a minister to fix that, and a minister is based in Lagos, of course, he's going to fix like about 10,000 naira. You say, oh, people in Lagos are fine, So how do you do that? People in other states outside Lagos are definitely not at the same economic level. So we think is the the governor of the state and the House of Assembly of the state that will know where the shoe pinches and then be able to fix, the presumptive tax. And that's what we are trying to say there. So we think instead of asking the minister to fix that, we honestly believe that that should be given to either the governor and the House of Assembly to consider. And this is with utmost respect, because we believe everybody is knowledgeable enough to have done certain things, but we are looking at what's going to be ideal, in that situation. So let's move to the second one, which is rate of tax, for companies. That's also in chapter 2, part 9, that's section 56. So our observation, from this section is that definition of income tax with reference to asset base, is different from the definition in some sections of the Nigerian Tax Administration Bill. Here we have 250 million, somewhere we have 150 million. So we are drawing the attention of the National Assembly to unify, that basis. Whatever information we have in the Nigerian Tax Act should also Nigerian tax bill for now. It's also the same information that we will have in the Nigerian tax administration bill. And that's what that is suggesting, because we're having different numbers as the base. Now, the third one is the rate of tax, for individual in section 58, referring to the fourth schedule of the bill. Again, there is no basis for determination of the effective rate. And these are things that, takes people to dispute or to court. So what's going to be the basis for the effective tax rate? We know it is tax on revenue, but which revenue? Is it the gross revenue? Is it the net revenue? I know some people are in court right now on our transfer pricing, regulation 2012, 2018, where the determination of TPNN, is an issue, where it says, net profit. And still, there are some situations where you find a party really want to use, gross profit as against the net profit. So how do you define that net profit and gross profit? We think this bill should eliminate, potentially, it cannot eliminate everything, but the one we are able to identify, we think it should, actually eliminate that. So we have development levy again. It was observed that there was no definition, there was no uniform definition of a small company. But in fact, this cut across, between the Nigerian tax bill, as well as Nigerian tax administration bill, as well as KAMA that is not even here. I think this is the right time now to harmonize what we call small companies in Nigeria. And we shouldn't be using two different bases. Sometimes you see it will be said small companies are maybe 25 million, some will say it's 50 million, some will say it's 120 million, some will say it's 150 million, and these are all our documents. And all these things are going to lead to dispute. So this is what we want to draw the attention of the National Assembly to. So let's continue chapter 3, part 1, section 65. Now this is on petroleum operations. All the ones I have said, there are very few points that we have raised. We are not critiquing the whole of the bill, no. I think a lot of work has been done and significantly fine. These are the few ones that we think, if we had the opportunity of, presenting to the committee, we would probably have presented them so that the committee will have a second look at them, but it's not late because the National Assembly is going to look at them during the public hearing. And we are very happy to, present this and, make our points very clear. So that is on income tax, which is chapter 2 that I just finished now. So I'm moving on to chapter 3, which is the taxation of income from petroleum operations. Now, the first one is section 56, which is chapter 3, part 1, section 56 on hydrocarbon tax. This section further requires companies' income tax returns to be filed. Practically, should we continue to subject one activity to 2 tax returns? The recommendation, in this paper, we provide solution, for the way forward. What we are saying here is that we know the committee has just adopted the model we have in chapter 4 of the PIA, which is that exploration companies are going to be filing 2 returns. And that is, you will file hydrocarbon tax returns, and you also have companies' income tax returns. I know the academics will be so happy with that because they will say that the hydrocarbon tax is more of economic rent. You first file that tax returns, then you also file the company's income tax returns, which everybody file. So, but we are talking about ease of doing business. And somebody is going to file 2 tax returns. What is the benefit of those 2 tax returns? The idea is that, is the government losing anything by filing only 1 tax returns? Since people have been filing, petroleum profits tax returns. Has the government been losing anything? For instance, if one barrel is $100, US dollars, for example, now the government will decide how much you are taking of that $100. And when the person filed just only one returns, and then you move on. For instance, you are going to file 30% under the hydrocarbon tax, that's 15 or 30%. Then you're also going to file another 30%, under companies' income tax. So you are 30 plus 30, not of the same basis. Of course, the effective tax rates are going to be different, but then let's just assume the same base information. So 30 plus 30 is 60%. So why don't the government say that, okay, we are reducing 85% to 60%, end of story. Now we are changing it, not calling it, petroleum profit tax, but now we want to be calling it hydrocarbon tax, or we even call it companies income tax. If you call it companies income tax, it's not an income tax, except that the petroleum has a unique, nature worldwide, and so you say hydrocarbon tax. So it's fine. You just, you change the name, then you reduce the tax rates to exactly where you want it to be, and then you have the two tax rates, 60% for those who are onshore, and then 45% for those who are deep offshore. End of story. And we have just only one tax return to file, and really not two tax returns. So I know we have some people, within our society that feel very strongly, about filing two tax returns. But I'm not too sure the committee had, sufficient time, to really look into this aspect. Because for me, ordinarily, some of us who are consultants, it will be good, if you file two tax returns and there are confusions, here and there, you keep on going here and there and so on and so forth because you charge for it. But it's not good for our country. That's the honest view of the committee. It doesn't really matter whether it pays us, it doesn't pay us as tax practitioners. So the idea is we want the committee to have, a second look, at this. The second point we look at is section 68, subsection 1, and section 91, subsection 1, on test of allowable expenses. We could see that only wholly and exclusively incurred cost deductibility, is inserted into the upstream oil and gas, activities. This, conflicts with the Finance Act, which was just recently passed. We know that once this law is passed, of course, it supersedes the Finance Act. But meanwhile, what we used to have before is only exclusively and necessarily. The Finance Act added reasonably to it, very recently. So having added reasonably to it to make it, for now is going to be reduced into wholly and exclusively. So we want the National Assembly to have a look at it, whether necessarily and reasonably is not necessary to be part of those tests to incur that cost. So the next one is section 72, which is subsection B, on the still chargeable hydrocarbon tax. And it says, in addition to observation above, the subsection may serve as a disincentive to investors, and Nigeria need more investment. Therefore, the 65% of revenue, which is allowable as maximum cost, claimable, should be looked into. What this is saying is that under no circumstance will any E&P company, that is exploration and production companies, be able to claim more than 65%, of their costs. There are certain costs that are not, put in there, but then the company will not be able to claim more than 65%. And we are saying that such a cap, after the authority had reviewed those costs, and you find them to be a genuine cost, in our environment, is going to really be a disincentive if you don't allow what you have checked and you have seen that it is wholly and exclusively for that business. Then again, you are limiting it to 65%. I know there are some countries like Egypt that does that, but we shouldn't mind. And the reason we must also know, those who put the 65% cap there is because some people load some costs, from the head office and all those kind of things. So what we are of the view is we should let our review be thorough and detailed, and then remove that cap of 65. Another one is number 77, section 4 on partnership. This is another very difficult, sections that was in chapter 4 of PIA, and we think the committee would have had a look, at that section. What does it say? Investors to be in petroleum operations, but only financiers. This will not entitle them to report, capital assets adding value, to their investment. Now, let me explain this. How this works is the person that has the license ordinarily have equity. And from this license, which is 100%, the previous practice before the PIA was, to farm out like 40%, to others. Then indigenous people retain the 60%. So you file your returns on 60-40. There have been some, controversies on who claim asset, for example. For instance, I know in the case of Express Petroleum versus the Federal Inland Revenue Service, in that case, there was who owns the capital asset there. So the person that funded the project is claiming capital allowance 100%. Meanwhile, the owner of 60% equity is also claiming, and without any funding. So I think that's where the challenge is coming from. We are not unmindful of that challenge, but I think there can be a JOA, an agreement forward. Because if we now say that the holder of equity should be the one that will be filing EPPT tax returns without having a dime, in the business, then nobody's going to put the money down. And it's we as country that we are going to suffer for it. Don't forget, we have a lot of reserves, over 37.8 billion barrels of crude oil is still in here. Since year 2000, we've mined just only 3.2 billion of those barrels. So if care is not taken, we might not have investors coming in, and then we want the committee or the National Assembly to have a second look, at this. Let's move to section 91, subsection 1D, on all the royalties incurred. So this one, in this one, the Finance Act, specify that royalties deducted should be royalty incurred and paid, and not only incurred. So what we are saying is that, but this new act is saying that, it's only royalty incurred, by way of accrual, but it's not paid. We know that royalty is paid within a very limited time. So where it is accrued and it's not paid, so the idea is it's not supposed to be allowed. But we can see that the word paid has been removed from this act. Is that really what we want to do? Because there is no basis for not payment. And I know in the industry always pay as far as royalty is concerned. So we think the word pay should also, be there. So let's move to the next slides here. So those are the few major points. We are not dealing with cross these T's and dot the I's. Those are for draftmen. They're going to, take care of all those corrections. We are only afterwards going to move Nigeria forward as a country. And we are not speaking, for the EMPs or the investors here. We are speaking, from the position of this is what Nigeria should do to really move Nigeria forward. Now, some few items on that chargeable gains. Let me be very mindful of the time. Yeah, okay. So, chargeable gains, excise duties and stamp duties, as well as tax incentives. So, chapter 2, of part 8, section 34, subsection A on the chargeable assets. Proceeds of 150 million exempted from capital gains, seems to be too high, and many properties apart from those in the cities, will not be taxed. What we are saying here is that the act, this new bill is proposing that asset of 150 million on disposal, proceed should be exempted from capital gains tax. And we are like, of course, with utmost respect to some states in Nigeria, you know, it's going to be very difficult to find, you know, properties that you sell for 150 million and above. And I know even during our section, you know, some of the chairmen, they rack their head back to their various states and say, apart from the state capital, in all the other towns surrounding the state capital, you can't find an asset you sell, you know, for 150 million. So it means quite a lot are going to be exempted, you know, from a capital gains tax. So we provide a solution by the time we get to solution, but we think 150 million exemption is quite high, you know, to the extent that only few properties are going to fall within the bracket of being subjected to tax. Now, item number 47 on indirect transfer ownership of, you know, companies' assets. So we said in this section, it excludes the recognition of the peculiar circumstance where a non-resident is a citizen and a corporate, you know, body of a country to which Nigeria has a double, you know, tax agreement. So we think we should pay attention to, you know, a double tax agreement where we say people are non-resident will pay tax on these, but we must refer that to what is captured in our double tax agreement. And then Section 160, subsection 1 on the exercisable service and the 10th schedule, it's our observation which indicated that telecom service is put in the categories of gaming, you know, gambling, you know, and betting, you know, among others. Under the principles of use them generis of the law, if you batch something together, it means they are in the same category. Now, we don't understand how, of all the industries, we know that telecom is already paying certain taxes, you know, and these taxes are from the users, not by the companies, but they are supposed to charge those on those users, which technically go to the masses generally. So, and we are thinking that telecom is not in the category of gaming, you know, gambling and betting, you know. So we want the National Assembly to really look into this. We will have wanted to have, you know, a one-on-one discussion with the committee, so to see the rationale for, you know, batching telecom with all those other three, which is really extremely, you know, exceptional, you know, for people to go into those practice or industry. So I think that ends our critical points on the Nigerian tax, you know, bill, which is the technical. Now I move on to administration, and I think that should be a bit fairly faster, and that's on the slide 9. You know, the proposed bill, you know, when enacted into law, will repeal the Federal Inland Revenue. After critical review of the bill, it's noteworthy that the bill is, you know, well drafted to meet the global best practice and standard, you know, in taxation. So what we itemize our observation here, there are a few items we also want to draw the attention of the National Assembly to. And the first one is returns assessment and then, you know, payment, you know, of income tax. Section 11D, you know, of that bill states, and it provides that it was observed that there is no definition, you know, for the basis of determination of effective tax rate, and this may lead to controversy. You remember that I mentioned that before, because I'm very much aware of some definitions under transfer pricing that took people to court, and the matters are still in court. So we shouldn't, you know, continue with the same mistake. We also noticed that in section 42, subsection 2, on assessment to be final and conclusive, that there was no, you know, clarification with respect to reopening and what constitutes agreement and appeal. All these terminologies, you know, are used in that section, and we think that should be in the definition section so that we know what that constitutes. Otherwise, it's going to lead to further, you know, controversies. Now we have just only maybe one item on the Joint Revenue Board of Nigeria Establishment Bill 2024. And what we have in the second schedule, section 10, subsection 1, on appeal, you know, to the Federal High Court. So after review of this second schedule, it was observed that only the Federal High Court was mentioned in the schedule. It is our very honest view that individual tax matters in the state, we can take it to the Federal High Court. So we honestly think we need to look into this. And the National Assembly need to look into this. Otherwise, we want to shut down the Federal High Court with only the tax dispute, because everybody wants to claim their right. Whereas we have other courts like the state high court. So now let's go to the stakeholders' concerns. So these stakeholders' concern, I must thank the coordinating dean, Dr. Mark Abani, for really, he almost finished the work even for me in terms of what are the main challenges. So I'm going to go through this also very quickly. As said by the, Chairman Presidential Committee on Fiscal Policy and Tax Reform, Mr. Taiwo Yedele, a prominent member of our great institute, that it's not unusual for a major reform, such as this to elicit keen interest from all stakeholders. This development is necessary to achieve the best outcomes that benefit all and provide an opportunity for further engagement, which is healthy for our system. All these observations we raise is what he tried to tag and say, look, people are going to look at this bill and come up with various views. So in addition, the committee duly consulted all relevant stakeholders to ensure there is common, front in achieving the set targets, of the committee. However, there are a few concerns that must be addressed, going forward, of which some of them are these ones that I'm going to go through. Making states inactive to revenue generation. This is bullet point number 1. And, we have some chairmen, during the session, we are looking at this bill. And I want my very good brother, Mr. Emmanuel Ekene, to comment on. He has a lot of passion for federation units to be strengthened and not put all, challenges on the federal government. So what would the state be doing? For example, we've talked about 150 million on CGT exempted, of assets. If you go to other states, the federating unit, the states, almost all the states will have nothing really to tax, with utmost respect. Some properties in the cities, if they are not sold, so it means for the whole year, they won't have any revenue from CGT. This is the truth of the matter. So we need to do some enumerations there and then see how the state will be. The other one is that in the exemption side of 800,000 naira is going to be, anyone earning 800,000 naira is going to be exempted from income tax, personal income tax. If that is done, how many people are earning 800,000, in the state, apart from some few states, like I think about 7 states when it was, looked into. So it means that in some states, so many people are not going to be paying tax, and even the tax office is going to be redundant, because all you are used to concentrate on is some few people who are the high net worth, and the work of the high net worth might not really be up to 10 people that is going to man their taxes. So the idea is that the states are going to be rendered inactive, if the bill is passed just as it is. So the tax exemptions, to informal business is also of concerns, to the extent that quite a lot of people will be exempted, and that's another challenge. Over-reliance on derivations and then allocations from the federal. So what the bill seeks to do is to, probably get everybody to be going to Abuja just to collect money, and then the state's really not, having much to do. And that is going to create over-reliance on the federal, which is not in other climes, really. If you take United States of America, for example, each state are so powerful in generating their revenue, running their economy, and just contribute, to the center. Worsening poverty and unemployment, is another area, based on some of the increment that we might be having, over a period of time. But we also notice that there's going to be a reduction in the rates of taxes, over a period of time in the bill. the VAT increase and then VAT sharing model, among others. I think that's the most turbulent one right now that everybody, I mean, some people are saying, okay, let's even shut down this bill because, you know, this VAT sharing is not fair, you know, something like that. I think we should dialogue more rather than looking forward to shutting down the bill. So, I mean, we align with Mr. President that the National Assembly should honestly look at the bill and come up with a review position, agree with the presidency, and then get the bill signed off. And so we look forward to that being achieved in no longer distance. So let's move to the next slide. So in response to some of these concerns, you know, of the stakeholders, this is what the chairman of the committee had said. He had said that businesses in Nigeria face challenges, you know, like multiple taxes and complex, you know, compliance issues, which hinders investment and competitiveness. Addressing these issues could drive economic growth. You know, our proposed reform include reducing corporate tax rates, you know, eliminating certain taxes, you know, on struggling companies, and providing VAT credits and establishing a tax ombudsman to protect taxpayers, along with a revamped tax incentive regime to ensure fairness. You know, what we can pick from here is that the committee's, you know, view, which we cannot fault, is that, look, let the business community survive, and then they can contribute more, you know, in terms of contribution, you know, to the society. They can grow to the extent that they will get to a point where they will be contributing, you know, to the economy. He also said that the plan aims to reduce the tax burden, you know, by simplifying and harmonizing the tax system, which will stimulate economic activity and increase revenue without higher taxes. Strategies include, you know, removing business disincentives, you know, enhancing technology and data use, simplifying taxes, and strengthening tax administration to curb evasion and ensure fairness, you know, for compliant taxpayers. You know, so this is the drive, you know, of the committee. For instance, I know the Federal Inland Revenue Service has done something very recently where, you know, our withholding tax that is a nightmare as it stands now. It's really a nightmare. However, the FRS has come up, I think, with a software now that if credit, I mean, withholding tax credit is deducted from one company, your account will be automatically credited. You don't need to see anybody. You don't need to send withholding tax credit note, you know. So it's just like our bank account. If somebody transfer monies to you, that your account is just going to be credited immediately. If you send in any assessment, you just debit your account, put your account, you know, in debit. So these are the kind of things we know the committee is focusing on. And to be very honest, and in fairness to the committee, we do align and then agree with that kind of reform that is going to simplify our tax system. So the reform aims to, you know, exempt the lowest income earners from tax, reduce taxes, you know, for low and middle income earners, and extend tax exemption to self-employed individuals. So key VAT reform include a zero rate, you know, on essential items like food, education, health, rent, and public transportation, benefiting, you know, a low-income household and addressing the cost of living. I don't think anyone is going to contest, you know, this with the committee. Now, in conclusion, these are the challenges, which is the second aspect that I'm trying to highlight, the idea behind, you know, these bills and the way we have evaluated it. So in conclusion and recommendation, you know, of this committee, the presentation has atemas, you know, key areas of concern emanating from and concerns from the stakeholders and responses, you know, to those concerns by the chairman of the presidential committee. Now, the conclusion that could be drawn from this part, you know, of presentation is that it is expected that the National Assembly would adhere strictly to the rules of law by conducting public hearing, you know, plenary sessions, and then to give opportunity to the institute as major stakeholder, to contribute to the quadriport bills. So these are the provisions of the bill, as well as the highlights of the purpose of the bill. Now, in a few minutes, let me just quickly run through the recommendations that we have, we have suggested, and it's based on those things that we have highlighted. So the first one is taxation of income, and really for double taxation. For presumptive tax, which I said each of the states should be able to fix their own. So there is need to amend this section to read the government of a state and not the minister, to make presumptive taxation regulations, to be implemented by states. Some states might charge 1,000 naira based on the level of their economy. Some might charge 2,000 naira, some might charge 5,000 naira, based on the level of their economy. And I think the House of Assembly have to debate, how much should they charge, based on their own. So I don't really think minister can sit in Abuja and just think that, okay, I'm giving this one to Abia, number one. I'm giving this one to Benue, number two. I'm giving this one to Lagos. I'm giving, I don't really think, we don't really think, as an institute that can be done. So we think there should be a discussion at the state level. Again, also rate of tax, for companies. So we said for consistency and elimination of ambiguity, the National Assembly should harmonize, this section to align, with the definition in section 143 as provided in the proposed Nigerian Tax Administration Bill, which defines small business. As I have said, it was defined that the small business is a gross turnover of 50 million or less per annum, and the total fixed asset of less than 100 million. When you go and look at the NTB, that definition is different, and so we want the National Assembly to please have a second look at that. The rate of tax for individuals, which is number 58, referring to the fourth schedule of the bill. Now, the rationale behind the 0% chargeable to tax income of 800,000 is a welcome development and appreciated. However, to be fair to all stakeholders, particularly the subnationals, and in line with Section 24F of the 1999 Constitution of the Federal Republic of Nigeria, as amended, it is the duty of every citizen to declare his income honestly, to appropriate to the appropriate and lawful agencies and pay his tax promptly. Therefore, there is need for a fair charge, of at least 0.5% minimum tax on every individual with 800,000, taxable income and below. There is also the need to consider the high cost of living, and reduce the first band, to be 10% from the current and proposed 15%, on taxable income of 2.2 million naira, while the institute is totally in support, of the other rates as stipulated in the schedule. Now, what we are saying here is that if you say people of 800,000 and below should pay a zero tax to the country, would they have the right to go and vote? I think that's by way of exclusion. So we've gone back to the Constitution, and we saw the Constitution, everyone should declare their income. And that is the rationale behind the 1%. We do understand also the committee saying that, look, if you charge somebody 1% or 0%, I mean, the cost of collection is going to be more. Here we are looking at a situation where someone will comply with the Constitution and honestly declare his income. We don't need to wait until he has anything to do. And that's where the state authorities need to, come up with various ideas of getting everybody to pay. Because if you don't pay, can you go to polling booth and say, I want to come and exercise my constitutional right? Which constitutional right? The people at the polling booth, you say, Mr. Man or Mr. Lady, Madam Lady, where is your tax card? I mean, where is your tax card? And you say, no, I'm not paying any tax because I've been exempted. Oh, sorry, are you a citizen of this country? You are not contributing anything. So these are kind of debates, you know, as to cost of collections and then the right under the Constitution to voting. This might actually excise a lot of people from exercising, you know, their voting rights. We look at the development levy, and we said National Assembly should ensure the harmonization, you know, of definition of the small businesses. So let's move to the next one, taxation of income under the petroleum operations. You know, chapter 3, part 1, section 65 on hydrocarbon tax that still requires that hydrocarbon tax returns should be filed, and company's income tax returns should also be filed by the same company, splitting it into 30-30 or 30-15, as the case may be. We are of the view that the CITN or the hydrocarbon tax should be converted into the CITN, and there should be only one tax returns to make sure we simplify in line with the objective of the policy and tax reform committee. The other one is the allowability test. So we said based on the observation, you know, that only and exclusively incurred cost, deductibility is inserted in the upstream oil and gas. So we believe that the other two words should also be included. Now let's move to the next slide. That's that's section 72, subsection B, on the chargeable hydrocarbon tax. We believe that 65% cap on the cost we need to look at it from a country, because if people are not doing well, they will be shutting down and then they will be going. So who loses there? Even our own indigenous people are also going to be having very serious challenge with that cap on their genuine costs, which they have incurred, for which the Federal Inland Revenue Service is empowered, you know, to review, disallow, and allow, you know, whatever is, you know, REN compliant. So section 77, subsection 4 on the partnership is another very serious issue on equity. If you say that tax return should be filed on equity, those who get license from NUPRC, which is our own indigenous people, you have the license, but you don't have the money. So if you have the license and you are not able to get money from the technical partners, how do you move forward? So, and you don't have assets to also get funds from the banks. So I think it's something that we need to look into so that our oil will not be under the ground there, getting wasted, whereas we are not able to move, you know, forward. On the issue of royalty, we are saying it should be incurred and paid, and to make it allowable, because you are 5 months after the end of the year within which to file, you know, file the tax returns, and payment of royalty is actually quarterly. So by March, ordinarily, you are supposed to have paid all those things, and then in May, when you are filing your returns, it will indicate that payment has already been made. Now, on chargeable gains and excise, you know, duties, instead of 150 million, you know, exemption of, we have said the National Assembly might really want 50 million, you know, 50 million at least. We will have in the state capital some properties that are going to be paying, you know, CGT, and so people in the tax offices are not really going to be that redundant. And we are also looking at the transfer of ownership, you know, of assets of non-resident entities. And we think we need to have consideration, you know, to the double tax agreements that we have. Now, also on the obligation, you know, to stamp duties, there is another one in section 126 that it's on when a criminal proceeding is, you know, levied against someone. We think that criminal proceeding should be changed to recovery proceeding or any legal proceeding, because non-payment may not necessarily be due to criminal tendencies. And then we're also looking at the excise duties, where telecom was batched with those other items like gaming and betting, and we think that needs to be redefined and telecom had to be removed from there is that it's exempted now, because it's pushed into the masses again, those who use telecom. So the committee or the National Assembly now have to look into that and say that, look, let's stop this telecom tax because it's our general masses that are going to use it, if that is what it is. But if not, then they need to look into some other sections that can come in within the income tax and then can be distributed as may be used. And finally on chapter 2, returns and assessment, and we have recommended the definition of an effective tax rate, to have whether on gross revenue or on net revenue, so that we can be on the same page. Also, on the issue of an assessment being final and conclusive, so we also recommend that this section be given a more clarity as to what is final, and conclusive from reopening perspective. And we believe that this is going to reduce, tax disputes, and improve our tax system. So finally, a recommendation on the Joint Revenue Board of Nigeria Establishment Bill 2024, where Federal High Court should, continue to adjudicate on tax matters at the federal level. While we recommend the inclusion, of the State High Court, as the case may be.
Thank you very much, Alaji, for a well and wonderful presentation. A lot of issues you have itemized, but we will not waste our time, and but we'll deal with all of them one after the other. Yeah, I don't know if I have Dr. Makabani there. Are you still there, sir?
Yes, I am.
Oh, great, sir. So we are going straight to the discussant one after the other. I'll quickly call Mr. Yomi Olugbenro to give his insight to the presentation within 15 to 20 minutes. Mr. Yomi, over to you. We are there.
Thank you. Yomi, just before you start, can I remind everybody, please, can you put any questions or observations you may have in the chat room so that we can pick them up? That was an awesome presentation. Thank you very much, Alhaji Aziz.
Thank you very much, my coordinating then. Thanks very much.
Thank you so very much. I echo the Dean's remark that Alhaji did a very wonderful job. So thank you so much for the insights, which I think is quite detailed. I think it's a huge technical session for quite a lot of people that might not have been familiar with the provisions of the bill.
Thank you.
Yeah, thank you so much. So quite very largely, I think what has been put together as the maybe feedback, to be shared back with the National Assembly as part of input, I can't disagree with anyone. I think they are quite well detailed, and the perspective is also forward-looking in terms of how can we make this process quite a lot better. But just some little bit of perspective. So I have just one addition that I might put, and probably one area that I will request that maybe we have a second look at again. But before I come back to those, because I know I have just 15 minutes, or less. So for the benefit of everyone that is on the call, I think we have close to almost 300 people on the call now. And just to avoid a situation where, as members of the Institute, our perspective is just fixated on the areas that need improvement. I think it's important as member of the Institute to properly understand what the Institute is doing with this. So there are quite a large area that the Institute agree with, which Mr. Latoye has already mentioned. So the focus has been what more can be changed. But this perspective is important because for everyone on the call, we shouldn't forget what the whole reform is all about and not lose sight of the huge area of improvement or benefit that this bill has. It's called a stabilization bill for a reason. The country is going through challenging time, and so there is pain, very palpable pain, with large majority, but there is also the burden of how do we raise more revenue in a very effective manner. And so it is that balance that this bill had, tried to do. And I just thought maybe 5 minutes or so of my time would just be used to, to highlight that. And maybe I must also like my conflict. I'm a member of the committee, and so it might appear as if so I think that disclosure is necessary so it doesn't look like I'm defending. Short of that, I think my goal is to ensure that we at least have the broad perspective of some of the key things that this bill is aimed at doing. So it's about balancing. We want more money, but we know where the pain is heavier. So how do we do this? And so in terms of the goal, like Mr. Latoye said, how do we consolidate and harmonize? Because we believe that's part of the pain points. You can't have hundreds of taxes and levies to deal with, multiple agencies to deal with, and even if the rate is low, the burden of compliance is heavy. And so this bill attempts to achieve that. Reduce the number of taxes, reduce the number of agencies you'll be dealing with. It also tried to deal with the issue of the complexity, that has entered into our tax law. The laws are old. We've made recent attempt to introduce Finance Act, and all of that. And now you have so many references just in trying to deal with a simple tax issue. Is it in this finance bill? Was it amended by this and all of that? So consolidating and harmonizing was also a very good attempt to simplify it. All right. And then the relief that most taxpayers have been clamoring for. People are poor, people are vulnerable, and yet the burden is heavier on them. And so the bill attempts to widen the gap for who is exempt, both from an individual perspective and from a business. And it's indeed one of the issues that I said maybe my recommendation would be that we have a second look at it, because in one of the comments that Mr. Latoye made, he had kind of raised the concern with exempting individual earning 800,000 naira, or less in a year, and the impact on the state's internal revenue services, because majority of people are within that bracket. Now, my own view will be, if we look at 800,000 is we're talking of per annum. 800,000 naira is less than $500 a year. All right. Roughly, maybe 70,000 or thereabout, which is what the minimum wage is saying. That's about $40. Now, I do not think the solution to keeping the revenue authorities busy and active is to continue to give them the right to go chase the vulnerable. So we should raise the middle class rather than force the low, to pay. So we can have different debate as to civic obligation, and all of that. And if you don't pay tax, you have a right. But many other countries around the world also have similar issue. In South Africa, if you earn roughly 100,000 rand, maybe about 95, 96, roughly 100,000 rand, you are exempted and you vote. 100,000 rand is close to 10 million naira now. in terms, if you look at the exchange rates, I think a rand is over 95 or something like that, 1 rand. In the UK, it's almost 25 million naira or above. If you earn about 12,750 pounds in a year. So in that area, because part of the real goal, the need for civic contribution is recognized. You pay tax, it's a civic responsibility, you are voting and all of that. But the burden, of continuously chasing this group, I think it's also the balance that needs to be struck. In fact, if anything from me, I think 800,000 naira is too small a band. I think we should actually raise it. That's my own view. If that will mean the Revenue Authority will focus on the Pareto principle of 2080, let's focus on where that will be. So that's part of the thing. And then the bill itself, I think my recommendation is that everybody on this call, we're all professionals, we need to read it. We cannot, focus only on the discussion, because the tendency is that the conversation online could be focused on the things that needs to be done, and we lose sight. And as professional, and as someone who does a professional tax advisory, I don't focus just on, the pain. My client or our client already recognize where the pains are. You're looking for where the benefit is, so that you can really maximize. And it's only when you read it. So use of technology, quite a lot of innovation. Advanced ruling is now in the law. Tax ombud is coming in. There are only 2 countries in Africa that has the Office of Tax Ombudsman. I think it's South Africa and Tanzania, for example. Now, this is like public advocate, for example, where taxpayers can go, is free. And that's part of the process of ensuring that compliance level, tax morale is raised, right? So that's a huge one. If you have one agency that is collecting, rather than, today is RAMFAC, tomorrow is Nigeria Customs Service, tomorrow is National Assembly, these agencies still do their statutory responsibility. But in terms of collecting and trying to do the administration, the interface with the taxpayer, it's minimized. Or if you look at VAT, for example, the expansion of the input VAT ban to include CAPEX, capital expenditure, and to include other overhead, I think is huge. Even from a PIT perspective, if you earn roughly 50 million naira and below, roughly your tax position may not entirely be different. You may not have to pay more taxes. It's the upper hand. So all of these are deliberately suggested in the bill to make sure that the cry for exemption, the cry for relief, the cry for looking after those who are poor, it's also taken care of. We also have provision like CGT, for example, the exemption. It's now, I think it's about 150 million naira. If the disposal process around 150 million, you make a gain of 10 million. Compensation for loss of office is raised to about 50 million. It will not be liable to tax, including some very creative addition, like if you get damages, maybe for injury, for libel, and all of that, of the same amount of 50 million naira, it won't be taxable. And then you also see the shift, philosophically, you also see the shift towards indirect tax. Because what you see in this bill is that there is a gradual reduction in CIT rates from current 30 to 27.5 in the first year, then to 25, in the year that follows, versus VAT, that is planned for for increase. And with the increase, you still have the exemption for small businesses retained. In fact, the threshold is now increased to 50 million naira, so that we have a lot more people because of the devaluation in currency, and all of that. So I think these are part of the dimensions that the bill tried to balance. The attempt is whatever is lost from the additional expansion and the band can be compensated for by the increase that we will get from the high net worth individuals, and then more importantly, the expansion of the band. Again, I know Alhaji didn't deal with that extensively in terms of one of the issues that has generated public outcry. I think again, if everybody read the bill, we might have a slightly different understanding, because I think some of the commentary might have been driven by limited insight into what the bill actually is saying. And I'm talking about the provision on the VAT, right? We know that we have vertical and horizontal allocation of the VAT. You get the VAT and it's shared across all of the tiers of government. From what goes from state, federal, what goes to federal, state, and local governments. In short, states are to get more if you start from there. The current allocation is 15% to federal, 50% to state, and 35% to local governments. In the proposal, states are to get 5% more, while federal lose 5%. So it will be federal 10, state 55, and local government the same. I think the area that generated controversy is how you then do the allocation among the states, and the attempt by the bill to suggest what is thought to be a fairer and more equitable basis of allocation, right? In the current allocation, 20% is on derivation, and 80% is 50% is on equality, and 30% on population. So, and even what we call derivation itself, it's itself debatable, and in fact, it's part of the challenge, because derivation means wherever the state that those VAT is paid to FRS, and so it favored headquarter companies, and it doesn't really have any connectivity with where the economic activity is from, right? So, but the bill is saying, look, from 20% derivation, we want to move to 60% derivation. And derivation in this case means where the production, or the consumption rather, it's taking place. And if you debate that with data, I think it should be fairer than just focusing on the states where the VAT return is submitted, because we consume all across, all across the country, at least largely for most of the items, that are covered. So just those balancing, so that we have perspective to the one that we are focusing on today as to areas that we could that we could change. I know my time. I'm looking at my timer. My time is almost up now. Now, I had mentioned that the suggestion on the exemption of 800,000. And I would like to listen to other people. My own input is that it should be retained at the minimum, or at least raised, rather than eliminated, because of the potential benefit. The same thing with the minimum tax. The same with some of the other exemptions that we've had. The other one that I think it was not mentioned, Alhaji, I'm not sure whether when the stakeholder look at it, this working group looked at it, maybe we find it okay. For me, I think it's something that we could suggest for inclusion. It's the rent relief, right, which replaced the SY consolidated relief allowance. I think it's in section 30, subsection 2A of the National Tax Bill. What we currently have is a consolidated relief allowance, meaning all of your earnings, gross income is aggregated together, and you are entitled to higher of 200,000 naira per annum, or 20% of your gross income. So, in effect, most people get, the 20% of their gross income as consolidated relief allowance. We no longer have that in the new bill. Instead, what you have is rent relief, and the clause, it says lower of 200,000 or 20% of the rent, the annual rent. I think that is small, especially judging by the fact that the marginal tax rate has been raised. So the highest band now is 25%. If indeed there is, intention in getting rent a relief for taxpayer, saying the lower of 200,000 or 20% of rent, I think that's tokenism, for short of better word. I would think we can recommend the retention of 20% of the gross income. All right, and probably even take away completely the 200,000, because how much is 200,000 naira? 200,000 naira in a year. That's probably $150 or thereabout. I can't do quick maths on my head now. So maybe if we add that at least help the taxpayer so all the gimmicks around trying to do unnecessary planning, and all of that is removed, and you at least know that you can get 20%. I think the real focus will now be how the revenue authorities can now be efficient, use technology, use data, use intelligence. We shouldn't deliberately make the process too easy because we think so many people will be exempted. We now focus on the technology, which is what the bill is trying to do with the Nigerian Revenue Board, that comes in, sitting at the, at the hem, using technology, connecting with all of the pocket of databases we have, then we can be a lot more efficient. If we need fewer people to administer, it's even good, because most revenue services today, part of the challenge they face is they don't have enough hands, right? So we have fewer people. It can be, we empower them, to engage more intelligently, and build their capacity to be able to help the nation move forward. So I think I will take a pause there so that we allow time for other contributors, and then we can take a Q&A at the end of the session. Thank you so much. I can take a pause.
Thank you very much for your contributions. We really appreciate you. Mr. Yomi, we decided to call you first because we know that if we call you last, you might change some of your opinion. Now you have dropped your opinions now. So our State Internal Revenue Service executive on this platform will respond to some of the issues you raised concerning the minimum tax rate. And at the end of the day, we want to have the same uniform position, for us to move forward. On this note, I will call on Dr. Jim Panwas to make his contribution, and also in response to Mr. Yomi's assertion on the minimum tax rate. Thank you very much. Over to you.
Yeah, good morning. Thank you very much. Thank you for having me. Mr. Yomi, well done for a very detailed analysis of the bill. Of course, I expect a perspective from you because you are part of the presidential committee. So I don't expect less than how to give us the good side of the bill as well. Yeah, so from us as a practitioner from this angle, there are quite a number of places that we feel we should look at, and we should really talk about them in real time, looking at the present economic situation. So let me try and start from the first part of the discussion, where the last part of your discussion, where you talked about the VAT, and which is one part that I know even the northern state governors and some of the emirates had said that the bill should be withdrawn because this thing has a negative effect on the north particularly. So now let me look at the old VAT law, particularly section 40 of the VAT law and the new proposed law. Yes, the federal ceded 5% to the states. And the idea looks very good that the state will have more money because they are taking 55% of the VAT. Then also local government remain the same. Now, but if you looked at the clause following that insertion in the new bill, it says that 60% will be on derivation. And the old bill, like you rightly said, is 20% derivation. Now, what it literally means is that, okay, now, so most of the, and we know how the VAT is being computed at the center, as it were now presently. Nobody talks about the headquarter effects on the VAT. Now, the headquarter effect is that, for instance, First Bank have over, I think, about 400 branches across the Federation. But, First Bank headquarters in Lagos, so it's assumed every VAT derived from the services of First Bank is paid from Lagos. Then again, if you look at importation as well, importation, virtually 80 to 90% of the importation that comes to Nigeria comes through Lagos. And even if the goods will be consumed in Jos or consumed in Lagos or rather in Kano or Enugu or wherever it is, the VAT is being paid from the port area in Lagos, and it seems that that VAT is earned in Lagos. Now, what it literally means, even as it were at 20%, I'll give you instance with some few statistics. I think in the last 2 or 3 facts, where a huge amount of the VAT was shared to cushion the effect, because virtually all the states now, probably, in fact, most of the northern states are running in negative, in the sense that their statutory allocation goes to negative, so they even borrow from the VAT to supplement, even in terms of borrowing. Now, Lagos will take, for instance, Lagos take 25 billion in VAT because of the derivative of that 20% that we looked at. Then you see states like Kaduna, states like Katsina, states like Nasarawa, Kogi, Kwara are collecting only 4 something billion. So it means even the 5% that is seeded would rather go to the bigger states, because you are now expanding their derivations bigger than what it were. So it means states like Plateau State, states like most of the states in the north will lose sight because of what we call the headquarter effect. Now, this is one part of the VAT, and this is one part we're saying we're talking about it. So why the sudden change of increase in derivations of the VAT from the 20% to the 30%, right? And what is the global effect on the subnationals? So now we are looking at it like, okay, it's a disservice to us, even though we consume the service, but because it's paid at the headquarters, and you remember all the telecom, all the financials, most of the headquarters are there in Lagos with you people. So you see, these are some of the effects, and these are some of the reasons why we are saying, no, this thing. No, but then for me, this is my take. Now we need to separate the baby with the bathing water. We can't throw the baby on the bathing water. In as much as the bill has its own good sides, there are some things, nothing is absolutely cast in stone. Nothing is as good as everything until when all of us looked at it and criticized it. Now let's look at even the exemption of the minimum wage, because I guess that's the idea of the 800. Now it means that if you are earning minimum wage, you should not pay. Now you all remember this old ancient theory of taxation that talks about ability to pay. So it means if you earn up to 800,000, yes, you are of the middle class or the no class, or you're trying to survive, but it shows that there's an ability to pay because you earn income, because it's on income. So what we're saying is that, okay, why can't we charge even a minimum tax rate on them? 1% or 0.5%, as Alhaji Aziz have even put up rules in his presentation paper, because you now take ownership of even the services that is being provided to you by the state or by the state actor. Now, but either peradventure, you are not participating in either in contribution or anything, then how can you take ownership? He gave a very astonishing example with that comment. He says that, okay, what about if you are coming to vote? Will you be able to vote and say you are exercising your constitutional right? And that negates section, I think this section 24, so section F of the Constitution, that we should disclose our willingly and pay to the constituted authority. Now again, look at the capital gain tax. Now, if you look around your city, even itself, how many of those properties that are up to 150 million that will be up for sales? That even those people that own the property that are above 150 million threshold that you put for capital gain tax, that are they even willing to sell? So it means that the new bill have a disadvantage to us, because I'm beginning to earn some little money, because then when I came in as a chairman, they weren't serious about the capital gain tax. But now I could see that we made close, I think about 150 million between January and now. And these are from small business owners, small households, and they sell them. This is not all about the huge amount. It's all about how many people are coming to treat their businesses. And we have that all around us. But you see, the thing is that if you are even looking at it at that higher threshold, I think the bill was conceived and was looked from the eagle eye of Lagos. You know, in Lagos, people are not poor. You don't have people that own houses of 10, 5 million. In fact, that is rent in Lagos. But from the part I'm coming from, this part of the country, not even up north, a 5 million naira house is a big house. A 10 million naira house is a big house. And we traded in those things. And those things are being traded, and they add to what we are doing even at the state level. Now, so the conversation of that threshold for me is a no-no. And completely, I think every indigene or every citizen of a particular state or nation should have a way of giving back to the country. And that, like I said, is based or hinge on the ability to pay principal. Of course, we cannot tax poverty. That I agree. But then again, just like in company setting or corporate setting, some loss relief are granted because you cannot tax losses. Yes, I understand that the idea of taxation, even in government itself, is to encourage citizens to participate. I agree with the fact that yes, businesses are the threshold, but then again, if you look at the graduating effect of even the payee that we are trying to propose at the new bill, for me, it's slightly higher, even though there's a threshold for exemption, because that graduation effect is that, yes, I understand we want to capture the high network, but we are trying to do what South Africa are doing. But you know, funny enough, we have a very huge gap between the rich, or rather the have and the have not. And that is the case of Nigeria. How many percentage of Nigerians are millionaires? The last I checked was about 2%. In fact, the percentage of people that earn above 10 million in Nigeria, is less than 10%. So it means, yeah, I understand the progressive tax system, but then it's also a disservice for hard workers. If you looked at it in another economic theory, that okay, because I work smarter and harder, then they are collecting more from me. So I feel it should be based or hinge on equitability, that there should be kind of fairness in the tax system. But like I said, I know that though I have issue of how fast the bill is being running, because I've never seen the bill until when it got to the National Assembly, and I wonder why. Because even at the Joint Task Board, only Mr. Tai will come and tell us, tell us the good side of the bill. We never heard about the bad side of the bill. I had never seen the bill until when it had passed first reading. And I downloaded the bill, I was reading, I was like, yes, there are quite a number of lofty ideas, but why are we in a hurry? I felt caged at a particular time when His Excellency, my governor, sent me an abstract of the bill. I said, sir, I have not seen this bill. How managed you got that bill? Please, can I get the full whole of the bill? Now, so even us at practitioner level and administrators did not see the bill. Yes, I understand the bill was designed by you people, but at least first point of call, even if no other Nigerians will not see it, the institute might not see it. Okay, what about us, the practitioner? Yeah, there are a lot of T's to be crossed. That aside, is not technical at all in any way. But then there are quite a number of silent issues. And like I said, the devil is in the details. I just pray that the National Assembly will expose this thing more to all of us, to other Nigerians, so that we can look at this. But I have this feeling that the bill is only looked at Nigeria from the view of Lagos. But this is me, my feeling. I'm being objective anyway. Now, you see, you've never traveled up north. And probably, yes, I don't know how many people are there. I know my friend Zain is also on that panel. And I'm sure he must have brought some of his insight into this whole discussion. But you see, the view of Nigeria is beyond Lagos. And we have, all of us have our peculiarity. And again, there are a lot of things that I felt that are very necessary in the bill, like I said. But at this point, I feel, and this is me honestly speaking, that we need to separate the baby with the bathing water. Thank you very much.
Thank you very much for your view, and it's becoming very interesting, and this is really what we want. I'll call on Dr. Zaid Abubakar to also make his contribution, also consider the issue of CGT in Kano State. We know that Kano is a very big place, if not in terms of population to Lagos State. I want to know if Dr. Zaid also shared the same view of Dr. Waz on this CGT issue. Over to you, Dr. Zaid, if you are there.
Thank you so much. Dr. Ayodiji, I want to start by appreciating Alhaji Aziz for a wonderful paper presentation, and also the two speakers, panelists, Mr. Yomi and my brother, Dr. Wires. Well, the presentation was quite insightful. I think we've learned a lot. I have to be let me put a word of caution here, that I'm wearing 3 caps at the same time.
Yes.
I'm a member of the presidential committee that come up with these bills. I'm also a member of the subnational tax authorities, so I also have my own concerns. Then also as an individual with his own opinion. So I'll try as much as possible to balance some of this, opinion that I have, and try to, as much as possible, be professional, as possible in trying to respond to some of the issues, raised. But let me start by highlighting some of the issues on the 4 tax bills before us. One, I know from the tax bills, there are attempts to zero rate most of the, exports that Nigeria will be having going forward. And that will serve as an incentive for export out of Nigeria. There is also an attempt to make, remote work possible for young Nigerians. And that will also have the direct impact of bringing more capital into Nigeria. Then the issue of, exempting the minimum wage up to 800,000 at 0 rates. But there is also another silent issue that I don't see commentators talking about. What happens between 801 naira to 2.2 million naira? Because on the new tax band, we know that the effect of the tax rate will begin from 2.2 million at 15%. So what happens between 801 naira to 2,200,000 naira? At what rate is the taxpayer going to be paying? Are those guys exempted? That is an area that I think we need to look at. Okay. That's true. Then the exemption on VAT and the exemption on individuals also is another area we need to look at. Currently the bill is proposing that from 50 million downward, companies are going to be exempted from paying. But for individuals, we peg it at 800,000 to 2.2 million. I think that is an inequity in itself that we need to look at. We need to highlight that so that the bill will be amended to be equitable across all Nigerians. Because if you say enterprises will pay from 2.2 million and above, while incorporated entities like companies, limited liability companies will only be paying from 15 million. I believe that is an incentive for companies to migrate from being a business name or nicknames as we have them in enterprises to incorporated entities, which are limited liability companies. So I think we need to look at that as well. Then the definition of small businesses that, as highlighted by Mr. Aziz, I think this is an issue that has been raised over and again. The bill needs to address the real definition that are going to be using going forward. Mr. Aziz also raised the issue of presumptive tax, that the bill proposed the amendment should be done by the minister, and he's proposing from the presentation that this should be given to the governors for them to have, powers over the amendment that will be happening going forward. I believe the right place to domicile some of those amendment powers are the proposed Joint Revenue Board, currently the Joint Tax Board, because they have the mandate to harmonize the revenue administration across, the subnationals in Nigeria. So that is one of the areas that I feel I need to highlight. On the issue of derivation, my brother, Mr. Pius, has detailed his opinion on derivation and the pushback we're having from the northern governors. I think out of the bill, if you read from beginning to the end, the only word to my own recollection that has not been well defined is the word derivation. Any other word has been defined. That is another area that we need to look at, have a consensus around the definition of derivation so that we'll be able to have an amicable passage of the bill by a National Assembly. On capital gain tax specifically, let me address that. If you check section 29 of the Nigerian tax bill, there's this proposal that the chargeable gains should be added to the normal income of individuals and be subjected to tax band. That I feel will give us the opportunity to lose a lot of insight over the capital gains that we should be charging on individuals and incorporated entities. It's an area that I feel the states are going to be shortchanged greatly because as we speak, disclosure on capital gain tax is not done voluntarily. The tax administrators have to go extra mile to ensure that taxpayers, disclose the transactions they have on land-related properties to the Revenue Authority. So this is an area that I feel, especially here in Kano, is going to be a very hard take for us. Currently, we are doing a lot to bring the taxpayers into the tax net, especially on capital gain tax. So coming with that proposal to say chargeable gains are going to be subsumed under the tax band of personal income tax is going to be hard, bill to swallow. So these are some of the areas I feel I need to highlight at this point. I said I'm very cautious of some of the points I need to highlight because of the 3 caps I'm wearing. So for now, these are some of the points I have to bring up. Thank you.
Thank you very much, sir. Your points are well noted. We will come back to you in due course. Let me quickly invite Mr. Emmanuel Inamani, the Executive Chairman, Enugu State Internal Revenue Service. For you have heard it all, and we need your contribution at this point. Over to you.
Thank you very much. Good morning, all. Good morning, Mr. Aziz, for a job well done. The chairman of section, my Oga, and the person who understands taxation in and out. Thank you, Dr. Omar Kabani. Let me say that Yomi has actually put a lot of perspective as it concerns what we are supposed to be doing or what we are supposed to be looking at. But permit me to say that I have to differ a bit. Because the area of personal income tax exemption is actually an ambush to subnationals to ensure that they are deprived of revenue, and again to ensure that one day somebody can raise a court order to stop sharing from FAC to state, and the state goes into extinction. I've never seen a country that is different from all perspectives trying to compare and rank itself with another country. We run to UK to say UK has exemption. South Africa has exemption. Let's come back home. Let's understand that we are different. In UK, from the date you are born, you have a unique identity. Everything about to the date you die. Everything you do, be it investment, deposit in bank, acquisition of a landed property, everything is totally tracked. And when it is tracked, it is also updated in your folder that at any point in time, any tax authority will see it and also be able to assess you. In Nigeria, we are totally different. The Prime Minister of UK is a member of the House. He earns one salary, and that's okay. In Nigeria, the president is totally different from a total of over 469 House of Assembly members, National Assembly members, and they earn salary that can pay one person of them with over 40 ministers in salary that can pay 2-3 persons in UK. So why do you want to compare ourselves with them? Are we actually interested in those comparisons? But the question is, what does Nigeria actually need? Does Nigeria need tax exemption? No. What they need is physical infrastructure to hold on to as a nation. They need this water to be everywhere. They need roads, critical roads. They need electricity. They need housing that is affordable. Is this available in the country? We are saying exemption, 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 as if it is a campaign to win election. I said no to it. It doesn't help our country. I was watching, I had a review last time. Somebody sent me something and said, where does people spend their money? Is it on food, family, friends, co-worker? And you can't believe it. Majority of people now spend their money on online activities, just online activities, watching video, watching pre-wedding, watching all sorts of things, and that's where their money goes into. After that, people find themselves in a recreation center, in a bar, in beer parlor, and settle their head of some family challenges. So is waiving a tax payment, where does it get us to? In Finance Act 2020, we exempted the minimum wage people. Where can we measure the impact of that exemption today? Who can calculate it? You mean the member of the committee? Can they calculate the tax waiver, the impact in the society? So anything that cannot be calculated cannot be measured. It's not worth doing at all. Why do we go into doing something we cannot measure the impact in society? Why do you want to exempt taxpayers who earn above $1 million? Why? There are some states in this country, about 7 of them, who cannot boast of making $1 billion every month in terms of internal revenue. And if they don't make $1 billion in a month in internal revenue, it therefore means that in a whole year, this state cannot boast of 15 billion naira as internal revenue. They only depend on fact. And this state that cannot make this 15 billion naira in a year, most of them has a wage bill of 50 billion in a year. So if we say we are exempting this income ban from taxation, what happened to these states that are vulnerable, that cannot even sustain themselves? So I see it that this committee that is constituted to revamp our tax bill, though they have done massively by consolidating the different tax acts into one, massive work. But my concern is trying to render states useless in terms of revenue. No, it doesn't all go well. For me, I think most of their travel can only be from Lagos to Port Harcourt, from Lagos to Abuja, and then in the most powerful cities of the world. They need to go to Jigawa, they need to go to Zamfara, they need to go to Sokoto, they need to go to Ebonyi State, they need to come to Enugu to see things themselves. Why do we always remain in Lagos and paint Lagos as if to say Lagos represents the entire Nigeria? For me, Lagos is a separate country of its own in terms of activity, in terms of population, in terms of everything. So let us not use Lagos. Let us restore 1% minimum tax. Nigeria is not asking for tax exemption. They're asking critical infrastructure development. I don't want to say much. In the other areas, I think they have mentioned the area of capital gain tax. It is actually to put the state in a state of not knowing what to do. Again, if you say we should concentrate, I've heard Taiwo say we should concentrate. And let me also point out here. Now, when Taiwo and his committee engage the Joint Task Board, no matter whatever we say, they've never accepted anything we say in all the engagement. And that's not how to engage. If you engage people and people say, look at our concern, you should be able to carry those concerns into the activity you are doing. But whenever we say you have engaged, you only come here to read what we are doing. Whatever we say doesn't concern you. That's not engagement. That's not how I understand engagement, and that's not engagement anywhere in the world. If you engage people, you take into consideration their concerns. Again, let me avoid all those ones. How do we tax the rich? You say we need to go and tax the rich. How? The Nigerian Customs Service. How can I know anybody from Enugu who has imported goods? How many containers have they imported in a year? Do I have access to that from Nigerian Customs Service? So where do I get access to that rich? The land being acquired by individuals because there is no unique identity. Some people can use a child born today to buy a land of 200 billion naira. Where will I see that child? Where will I know that he is the father that owns that land? The name I will see in the land registry will be different from the name that is actually the owner of the property. So where is the data? If you say there is data for the rich, for taxation of the rich, can we try it for 1 year? If it pays off, let us exempt every other person. Why can't we try taxing the rich first? If it pays off to the society, then we can now begin to discuss the tax waiver. We have not implemented it. Nobody has been able to tax the rich. And remember, in Nigeria, those people we call the rich are also what we call the politicians. Taxing them is not as easy as you may think. It is. So sometimes there's a lot of political connotation in taxing those people you call the rich. Many of them are the political sponsors. Many of them are even the political godfathers. It has a lot of political connotation for you to tax any of them. So these are issues we have in saying you want to tax the data is not there. Sometimes you write the bank to give you a data, the bank will give you reasons why they cannot. And we have tax consultants who are also very, very keen in defending the bank not to give you the data you want. And these are our members, these are Nigerians. And they have interest to protect. So we have to take this into cognizance. It is not important that we exempt everybody. Exempting them, how do we measure the impact, please? Secondly, let me touch an area that we failed to address. The issue of trying to remove the education tax. If you go to our tertiary institution from A to Z, public institution, what you will see there is third fund building, third fund building, third fund building. In Enugu here, all the tertiary institutions of government establishment, if you visit there, most of the beautiful houses and even equipment you can see, we are bought by third fund. So how come we are now saying third fund is not important, but student loan? How come student loan is too important to us as a nation than third fund that is doing all the magic in our tertiary institution? So why should government directly indulge in student loan? What is the duty of banks? We have different banks that government can incentivize to give these loans to students. And also it becomes a viable business, even if it's microfinance bank. So why is government delving into that? So these are we need to take a look at. And I want to say that the members of committee should listen to concerns of subnationals. This exemption will just put most of the subnationals into a state of revenue drive. And one day, because all of them are dependent in what comes from Abuja, and next year the projection I'm hearing is that the price of oil will go down significantly. Some are saying it will even go below $40 per barrel. And if that happens, the fact that we see today, that is over 1 trillion this year, will not be there. It will go down drastically. How will those states survive? So it will not take much of our time. These are just areas of concern. I think we need to look at it. Let's remove exemption entirely, please. Let's give 1% minimum tax or 0.5 as Aziz has suggested. And they let us not waive any capital gain or capital sales in the state. Ebonyi State, tell me that property in Ebonyi State that's going for above 150 million. Just one, mention one, even in the capital city of Abakaliki. Just mention one. So what we have done is that we have excluded Ebonyi State from capital gain tax entirely. So let's be very careful. Let's not just use the elitist method in judging whatever we are doing. We can't have all tax consultants based in Lagos dictating what happens and using Lagos as a scenario, as a case study in everything we do. Other states have their peculiarities. Take them into consideration. So thank you very much, ladies and gentlemen.
Thank you very much for your contribution. We've heard you. You've raised the issue of recommending 1% for minimum tax. You also talk on education tax, and you also talk of data availability. And at the end of your contribution, you mentioned capital gain tax, where they might not even tax anything on capital gain in Ebonyi State. On this note, I'll quickly invite our Vice President for his comments and contributions before we proceed. Thank you. Over to you, sir.
Good afternoon, distinguished ladies and gentlemen. I want to thank all again for this wonderful discussion. And I want to make some disclaimer before I start talking. My president have not sent me here to make any comment rather than to read his address. So any comment I'm making is an individual person. And my experience, 36 years working experience, and 24 of them being in a revenue agency. My comment here are as follows. You see, when laws are made, it will have very fantastic intention, but it will also encourage crime. It will encourage substantially crime. Example is this issue of CGT, or 150 million. I remembered I bought a land in Owerri, and when the lawyer was to make the power of attorney, he said, Oga, if we state all the amount you paid, though, that the capital gains tax and other things will be too high. I said, look, I've told you to do agreement. I'm not a lawyer. Do the right thing you feel. So I think I bought it 3.8 million, and he made the agreement 1.6. When we were trying to perfect the papers, the State Internal Revenue Service told me that, look, Oga, there's no rand on this place, so where you can get 1.6 million. So we will adjust it. And thank God you're working in revenue office. You know what we know about best of judgment. And I didn't argue with them. They revalued that land to 3.7. And I paid both stamp duty, capital gains tax, and everything on the reval amount. So if 150 million or even 10 million is exempted, we have forgotten an anti-avoidance characteristics of our society, that once you have pegged, every other start to know it. When 25 million was made exempted for income tax purposes, when I go to supermarket and I see an account, if you are remitting, it will be the account of the wife of the proprietor. It will not even be the name of the supermarket you have gone to buy, because people are targeting 25 million as a bait, so they don't want to attain it. So anti-avoidance will make it very, very impossible for us to achieve what we intend to. For me, exemption does not bring anything. Since the VAT was removed from fly schedule, that is when I started buying economy, 300,000. When VAT was there, it was 18,000, 20,000, 30,000. People were still complaining, tax. Now VAT has been removed from air ticket. Is it cheaper now? The truth of the matter is that exempting, if you even say there is zero tax in Nigeria, all our problems will not be solved. Rather, we should tax everybody and use the money judiciously for their benefit. We are talking about fiscalization. Fiscalization, how we put them in place. If they are in place and in the course of operationalizing it, you find out that, oh, our target have moved from 5 trillion to 30, 40. We will start eliminating the small ones. Then we can now see that, look, because of this refinement of fiscalization, we can track everybody. In my state or in my local government, apart from the local government workers, they cannot track what I earn, what comes to me. The people they can only track are those who are working in the local government. But if the fiscalization on everything, all the data is available, they can also trace that, oh, I have something that is adding to my income, which is generated in the state. So my personal view is that let's allow all this refinement fiscalization to work. When the returns start coming in and we see how it's impacting, then we can now go further to say, okay, let's remove, even if you are earning 5 million, we can exempt you. Again, on the band of 800,000, if you multiply 70,000 by 12, you get 840. My thinking on that 800,000, I say, what are the 40,000? So if we want to use 800,000, let us talk on 70,000 times 12, which is 840. Then on VAT, on the areas of zero rating, you solve one problem and you create another. The implication of zero rating means that all the input you incur will be coming for refunds. And that could be like a subsidy, which nobody has ever told us how much subsidy has. If you have said it's exempt, one, you will eliminate the issue of applying for asking government to appropriate funds, to refund to people whom you are not even sure whether the people you are giving it. There are some input that cost across multiple items, and the people can take input from one end, is genuine, and then claim it for the one that is related. So I don't want to take too much time, but I know that when we are making these laws, we should bear in mind that our clients, we are very clever. For everything you state, there is a way. If you retain this 800,000 as exempted or 840,000, the target of people is that how do I make all the money that I can account for to fall within? And that will not do much. So let everybody pay tax and let those who this tax is received use it judiciously. This is my personal, not as a vice president or not as a CITN position, because even if I'm president today, what I can propagate is what my members, stakeholders have. I will keep my own personal view by the side. But if I have opportunity to air my own view, I will say that this is my position. Without artificial transaction clause in our laws, when I was in service, there are people that are very difficult to get information and get them access. The only thing that once you read the section on artificial transaction, I said where, in the opinion of the board, that's where I was able to bring in some people. So we don't have this data. When we compare with South Africa, we compare with all these places, they will track you. When I was sending school fees to my daughter, they asked for my tax clearance from United States. And my wife too. So all these things, it can't happen here. You can't, there are a lot of things that we can get away here. Even the people who are who are on top there. I know when I was in service, there are organizations that we never saw their salary. Each time we send audit, they say we cannot give it to you. So under that circumstance, is it how the state can break through? I think let me stop here so that the expert will continue. Thank you very much.
Thank you very much, sir, RDA VP, for your personal contribution, as you rightly said. But we will take some of them because they are pertinent issues. We also need to look at. I'll quickly turn to the lead presenter to make one or two comments. Then we'll go to question and answer session Then we'll try to round up this section for today. Over to you, sir.
All right. Thanks very much, Dr. Ayodeji, for this excellent coordination that you are doing. You know, when I started the presentation, I said sometimes even as the chairman of the ad hoc committee, I almost regretted accepting our coordinating then saying I should chair that session, because you have powerful people in opposing, you know, positions, and you are me. And but luckily, we are all able to unanimously agree, you know, what I was able to present. Because my own view is to listen to everybody and say, okay, at the end of the day, if we are not able to agree, those who say aye, raise up your hand high, and those who say nay, now the high is half it. So whether you agree or you don't agree, nowadays is high. So, and I think the National Assembly is also going to be able to, you know, respond, you know, to some of these things. I think most of the things I would have wanted to respond to, we have seen the counter views. You know, when my very good brother Yomi was, you know, making his point as to, you know, 800,000 is even, you know, fairly small, you know, comparing to some other climes. And I was smiling in my mind what the response is going to be from my other good brother, Mr. Ekene, you know, from the chairman of the Internal Revenue, you know, Board, Enugu State. So I say that, look, there is one word I want us to erase, you know, consultant from, you know, Lagos, elitist consultant from Lagos. I think we are all, let's look at it from Nigerians as Nigerians. Whether you are a consultant, you are a farmer, you are a businessman, we definitely have an input, you know, in this bill. So 800,000, yes, as I said, you know, based on the first point on this presumptive tax. That was the reason why we said, look, let's leave this thing to the state. And so based on the economy of that state, Lagos State can say it's 10,000. You know, Enugu State may say, no, sorry, it's 1,000. You know, some other state I say, no, it's 5,000 here. It's 3,000 there. You know, and I had also the, you know, the representation that maybe the new joint revenue board is about to look into fixing all those things. Again, where we have to look at it, we debated on that as well, but we look at it that they are like more of advisory to all the states, and then they can only document, you know, from those states. But in terms of in-depth discussions, it has to do with the House Assembly that have to, you know, pick their own local executive bills and then be able to come up with something. That's the way we look, but we are never fixated, you know, in any idea. Let's take it that we are all honestly coming with our view. And not necessarily to be harmonious from the onset, but I think on the long run, we can definitely, you know, agree. I noted what Yomi said about 800,000, you know, being fairly small, and I will only agree with him when we are talking about about 7 states, which we also analyzed. You know, these 7 states includes maybe like Lagos, Abuja, Rivers, you know, Kano. You know, these are some of the states that, look, they can stand on their own. And in Nigeria, we know all these 7 states, they don't have an issue. Whether there is federal allocation or no federal allocation, they don't have any problem. But quite a lot of states, I'm not too sure, they will be able to survive. And without saying this is a, you know, right or wrong answer, the answer is for us to discuss it and then come up with, okay, how do we come up with a model, you know, in this circumstance? So can we, you know, revisit this issue? But I must take what Yomi said about highlight of good areas. I think, Doctor, we need to create, you know, some sections as we did for the concerns, you know, but as I said, we already appreciated the committee, you know, of which you are a member, and my very also good senior brother from Kano, Doctor, is also a member. So you've done very good job. but again, we must come up with some bullet points of those good points. I must admit that that was an omission. We just felt that, look, what is good is already good. We all agree, we accept. But it's good for us to bullet point those good things as well in the presentation, even if it's 5 or 10 minutes to go through that. So I absolutely agree with you, Yomi, and that will be done in subsequent, presentations. This is going to be improved and let the president know that this is a good outcome, of this discussion. There are also some discussions, technical one on the rent, as to whether 200,000. But again, when it comes to bus, I can tell you, the federating unit is definitely going to disagree with 200,000, being a very small figure. How many people will pay a rent of 200,000 in some of the state capitals in Nigeria? Apart from those, now we can expand the band to about 15 states, because economic levels are totally different. You might find out that in some states, you hardly find, you can't demand like 200,000. They say, sorry, who pays a rent of 200,000 in this rural area? It's only the state capital where you find people who will struggle to pay even 100,000. In some of, my area, in some states here, even in Southwest, you find where people are paying 10,000 naira per room, and everything is is about 120,000 naira per annum. So hardly will you find such level of funds. So then the use of tech, to generate revenue. Again, if the law is passed as it is, even if you have tech, so what are you going to discover to tax? That's going to be another challenge. I know Yomi is a great thinker. So we need to sit down and then look at, okay, if we exempt, in this rural area, about 800,000, 150 million, we exempt all these things. So can we have some creative ideas on what really to tax? And then we go to those states and we can fix some states and visit the chairman of those states and say, can we have the statistics? Are we going to have some things, to tax? But I must thank him very much for the contribution. I also thank Dr. Wires for his comment, although his point is basically that the draft bills are from the eagle eye of Lagos. Why I know that, yes, there are some reliefs that are stated there, I think the position of the committee is actually to look at things from a national perspective. And then, if I understand the committee very well, what they are saying is that, the low-income people have been paying taxes over the years because we can capture them. And the higher income people is difficult to track. Now, let's focus on them. When that other one is no longer there, then we'll focus on the rich and they have to pay tax. And so that tax now, when it is collected, it should be more even than what we are aggregating from the low income end. So not really, from Lagos perspective, because this was actually discussed, and then this was the
Those of us online has lost a
I think we have lost the audio, please.
Okay, are you hearing me now?
Yes.
Oh yeah, sorry. So I was responding to the issue of why the bill, is passed in a hurry, which was raised by Dr. Wires, and most respectively, and I am of the view that the bill should be exposed to certain, people who have ideas about, these things. But I'm also trying to share my view as to why the bill might have not been shared, before it gets to that point, although it will still be shared. And I was giving my experience of the Petroleum Industry Acts. That Petroleum Industry Act started from the journey from year 2000. In 2001, discussion around draft bill, was in there. And because there is going to be discussion, with the IOCs, with the government, NNPC, with this and that. At the end of the day, the bill never came out until 2009 years after. When it came out, it could not be passed. In 2009, it could not be passed. Bill. 2012 bill could not be passed. 2018 bill could not be passed until the 2021 bill. And if I tell us with utmost respect, I don't know of any contribution from anywhere to the 2021 PIA. It was purely government people. President signed it. And basically, that's how, it works, and then we have the PIA. So whether it works or you say, oh, we have challenges with PIA or not, and that's it. So it's when it gets to the National Assembly that this is what the government wants to do, and it moves on. And basically, it might be very close to that approach. And I think maybe as time goes on, we'll have to find a way of still debating things and coming up with collective opinion that people are not going to be able to contest. It doesn't necessarily have to be someone's opinion. Even at all those local levels, we would, devise a means of listening to everybody. And where we could not agree, okay, we are 21 in this hall, and then we want to say, should it be 800,000 or should it be zero? I mean 1% minimum tax. So what do we want to agree? Of course. Now let's have opinion of everyone. So let's us raise up our hand, and we have 11 against 10. 11 will carry it. So there is not going to be any argument. Those 10, I will be expecting them to agree with the 11. So, okay, let's exercise it and let's see how it goes. Because we can also review the law in the next few years, just as I agree with the PIA. When I saw what was passed in the PIA, I have a very critical opinion that this PIA cannot, with utmost respect, promote investment in the oil and gas industry. I stand to be corrected. And today we can see what is happening. So I think it's for the government to sit down again. You are saying you are capping my cost at this, I cannot do this. Okay, no problem. Hold on to your asset. I hold on to my money. So, but we will first agree. Now government will sit down. Okay, so why are we not having investment in this industry? So you highlight those things again. Let's listen to those who are going to invest. Then we'll move on. So I think that's the way. We also need to look at this bill. Just a suggestion, so that we can move on, at least as an institute, for us to have a common, position. And so that that will be the way we can, move on. I had also Dr. Said from Kano, my executive chairman, on the use of a joint revenue, board on those presumptive tax is a good idea. However, they need to be empowered, but they might have to travel around all the states if that is what we will adopt. But we strongly think that the House of Assembly of those states should deliberate on those things and come up so that they know their people and nobody's going to fault it. If you do that and then you bring, a tax bill from Abuja, they will say these Abuja people are imposing. You see how we are saying Lagos elitist. Now it will change to Abuja elitist. And they say, can you imagine? They just drafted something and they just threw it at us. So it's neither here nor there, as I want to say. So let's look at it more from a positive perspective. And also, my chairman from Enugu and Mr. Ekene also did mention that probably is an ambush again. You can see very strong words coming from different. Smile and said, my chairman is really not an ambush. It's just that we may be hungry in the same way, but we don't think in the same way. For instance, those who are saying, let's exempt the 800,000, I do understand what they are saying to say, these people have paying taxes for so many years. Let's exempt them now. Now, I also do understand what my chairman is saying to say, look, you know, if you exempt those ones, and we know it's difficult to get our bosses, because the people that are going to sign this law, they are our bosses. How do you get them to pay tax? So now again, you say the 800 people should not pay tax. You are not also able to get the big men to pay tax. You can't do anything to them. And of course, you might lose your seat if you are not very careful in an attempt to collect certain taxes. You know, so it's not all the states that will say, okay, go ahead and go and collect tax from whoever it is. They say, hey, is he coming for the second term or something like that? So everybody will be careful. So if you are not able to collect tax from the high net worth, and you are no longer also collecting from the low pay, so how do the states run? Now, the question will be, will it then be fair to say you are collecting from the poor and you are not collecting from the rich? So we will be on that debate until, you know, the whole hours, you know, run out. And that's why I said it's been a very challenging thing to do, you know, balancing of those things. And finally, I must thank our Vice President, Mr. Innocent Ohagwa, for his practical contribution. He's talking from practical experience there, you know, in terms of these exemptions and how, you know, people will definitely start thinking about it. The business people are always ahead of the law. You know, before you find out that it's 150 million, of course, everybody will be happy. Say it's 150 million. Okay, break it into 2 or 3. You know, so you pay me this one as whatever. You pay me that one as that one. You know, and the agreement is that the value is this one. It's just about 140 million or 145 million. So at the end of the day, everything is exempted. Meanwhile, you collect the whole of your money. So although we cannot enact law to capture all those kind of things, it's going to be very difficult. But then we should find a way of making sure that you know, everybody is captured, you know, in the law. I also align that in those advanced environments, tracing is very easy. You know, if you commit any fraud somewhere, they're going to trace you, you know, and going to capture it and then tax you. So because of also the sanction that is in those environments like the UK or South Africa, you definitely don't want to, you know, hide something. It's better you do it right and then you move on. But in our environment, you can hide something and hide it for life. It's only if angel will ask you when you enter your grave. So I want to rest my case here and get doctor to continue. So I thank you very much, all the discussants. You've done brilliantly well. Thank you very much.
Thank you very much.
Thank you.
Thank you very much, Alhaji. Please, Dr. Deji, can I please ask, Yomi has a specific comment he wants to, clarification he wants to make before we open up to general comments.
All right, sir. Mr. Yomi, to you.
Okay, thank you. So, I mean, interesting debate. I would, and this is what is really needed for us to make sure that there's a lot of engagement and input in whatever make it into the law finally. Maybe like 3 or 4 quick comments, and I'll make it very quickly. So, in terms of the composition and the engagement, obviously it can be. I mean, it needs to be more. But at the minimum, there are 80 members of the committee. And just to clarify also that they are not just based out of Lagos. In fact, all of the IRSs across, there were key representation. So I remember on that committee, we have the chairman of Bauchi, chairman of Kano, chairman of Akwa Ibom, chairman of I think Kwara and Ondo, if my recollection is correct. So it's not just concentrated, you know, in one area. And so, like Mr. Aziz said, if you have that large number of people, different opinions will have been debated and challenged, the pros and the cons. And then at the end of the day, there is tendency to then think, okay, so this looks like where we could have consensus around. So if we open it wider and we're able to get consensus around some of these knotty issues in a different direction, I think it will still make a good outcome. The second point quickly is that I think the concerns of the having people who are low income earners in some part of the state was also quite debated. And when we were looking at the rate, so just to share a perspective on that, the conclusion or the thinking was that, yes, income is low. The people need infrastructure. But the expectation is not that it is still from these low income earners that will expect the revenue to be generated. So this is not a socialist state, as it were. So how do we ensure that we also give to the state and the indigenous of those states that are really poor? So I mean, on the call today, I think the thinking is that they should be made to contribute. Whereas the thoughts, the alignment, when we had the conversation was more of, that is really where the relief is needed the more, So it's just a bit of debate. And then I had a lot of questions around, a lot of comments around 150 million naira for disposal of chargeable assets from a CGT perspective. I think we need to read the law and clarify, because there was specific focus on gains on disposal of shares. And the reference to the ban that that you're referring to, so for shares specifically, we currently have it in the law where and we know the reason why. We want to promote investment in the capital market, and all of that. And so the ban for how much should be liable to capital gains tax from a disposal of shares perspective was raised to 150 million proceeds, and then provided that the gain is not more than 10 million. So some of the examples that is being used to describe the exemption that have been given from a CGT perspective are not exactly what the bill currently provided for. So I just wanted us to separate the distinction between the provision on the disposal of shares and the gain in that particular aspect. 3 or 4 on the VAT. I think Doctor, when he was making his commendation comment, actually was very spot on when he was talking about the headquarter effects and the fact that input duty effect is skewing, what we are regarding as, derivation for a particular state. And that's quite correct. Now, but what he didn't touch on, I'm not sure whether he has, again, seen that from the law, is that that's exactly what the new recommendation is aimed to address. The new recommendation is not just changing the derivation from 20 to 60% and retaining the basis of determining derivation. So derivation largely currently favor headquarter company, the state with the headquarter company, and the state where import duty is collected, which will be largely Lagos. Now, even though derivation has rise to 60%, the basis of what constitutes derivation is now consumption, place of consumption. So it's no longer where the tax VAT returns are filed. So put simply, when we did the analysis, unlike the general perception that Lagos will benefit more, Lagos is probably going to lose more, because that's where the headquarter effect and the consumption and the import duty effect was heavier, in the original sense. But now the derivation try to balance it out a lot more fairly. Obviously, I mean, when we do the analysis state by state, we could see where some of these swings will be, and I think it is in the national interest that is actually the state are listening to, with some data, so that everybody's anxieties can be allayed. I just think the current anxiety is driven by a misinterpretation of what the bill is saying. I'm not saying there may not be some analysis at the end of the day, but I think it's not currently being messaged, the right way. Again, I think as a matter of general principle, the other thing that I think we also need to be aware of is that there's also a need for a philosophical change in the way we look at how the revenue is shared in the country. I think we make state look like poor cousins by just thinking it is only your IGR that determine your, efforts in the state. And when you get something from the federation account, it is just, largesse from the center or benevolence of the federal government. That is not so. The federal government is not supposed to be seen as, a more qualified beneficiary of what is coming to the center. That's state. And that's part of the reason why, even from the name perspective, the suggestion to change the name from FIRS to the Nigerian Revenue Service is important, is strategic. The LS is not to be seen as a tax collection agent for the federal government. They are collecting for the federation. And so if the state goes to the center the federal government is also going to the center, as it were. So we are all cap in hand going to the center, and not state going to federal government to go and collect. So the reason why the NRS or collecting at the center is being pushed is because it helps us with the efficiency. It helps us to minimize the burden of taxes. We can collect a lot more. The hide and seek that taxpayers could do, hiding from one state to another state, is a bit minimized when it's collected at the center. But that center agent is not the federal government agent. It is a federation account agent. In fact, there was a to even make the name federal revenue service, so that we will know that this is not federal government. So I think the state also needs to give themselves some bit of relief, knowing that we are not poor. Federal government is not being nice to the state by allowing them to share from what everybody is entitled to. So that philosophy also needs to change. And so we no longer see states from how much IGR are you generating, so that we don't continue to create this challenge. The last point, so we can open it for this thing. On the one on the rent, I think Mr. Alatoye responded to it. I agree, 200,000 may be small in Lagos, but it's huge in some other states in terms of rent. But if the provision is limited to the maximum amount of rent paid, or a relative percentage like 20%, I think that's better than just saying 200,000. Okay, so it's supposed to be actual amount of rent paid. So if it is 50,000, that is a fair deal for annual rent in your state, you claim only up to that maximum amount. And if it is 5 million naira or 2 million naira that will be in Lagos State, that's relativity. So my suggestion is that relief can be changed to the maximum, not low, I mean the lower rather, of the amount of rent paid, or 20% of gross income. So that way we can get some bit of relief. So I thought I should just make those quick comments before we engage with other questions. Thank you so much.
Thank you. Dr. Deji, can you please take over and do some questions? I've extracted some from the chat and I've sent them to you. So some of them have already been answered. So you may want to have a quick look at that and try and take some things together, given the time constraints. But thank you very much, everybody.
Thank you very much, sir, Mr. Yomi, for your submission and your last suggestion on below of 200,000 or 20%. I think that is very good for us as part of what to adjust in our document. Let me quickly read from the chat room, and I'm coming. Okay. Okay, a lot of them has been attended to, like the coordinating dean said, but this very one, I am Onwaemeka Etele, membership number 21989, and he said, I deal with NGOs. Please, can we address why VAT on services rendered to NGOs for humanitarian donor-funded projects was not included as VAT exempt? I've written that. I think Mr. Yomi can take note of this, since he was part of the insider that decided on the issue. Another person was also saying from Jalingo District and Society, what will be the relationship of proposed Nigerian Revenue Service and the subnational level once it says Nigeria Revenue Service, and then it looks like it's covering the subnational revenue compared to the former name Federal Revenue Service? Mr. Yomi has thrown a lot of insight into that one. And another one from the Finance Act 2021, already exempt minimum wage earners from tax. The current 800,000 per annum exemption proposal is still below the current minimum wage of 70,000 divided by 12. I think we have also mentioned this. Mr. Yomi might also want to respond. Okay, let me quickly. Okay, the last one. What measures is the bill is taking care for making easy compliance to constraining the high level of evasion in Nigeria? Our dear VP has also mentioned something about anti-avoidance in this direction. Those are the few questions we have on the chat box for our discussant and our lead presenter for now. Thank you very much. Okay, yes, if Mr. Bachir is on or Mr. Tulu Adige, I've seen.
We've lost the room. We've lost the room, both the moderator and Alhaji Aziz. We can't hear you.
Oh, okay, can you hear me now?
Yes.
All right, I've read out the question. I don't know if you actually.
We heard the question. We heard the question.
Oh, fantastic. So we want you to respond to that, while we also take Mr. Tulu Aduge on board also to give us insight to the reasons why the committee arrived at this decision. Thank you, sir.
Thanks. I can take a few of them. The first one on VAT, I think that's Nwa Maka here that asked the question. So the question is services provided to NGO and some specific buyers, not being in the list. So I mean, generally, I think what has been made with respect to VAT is this: to repurpose VAT as a consumption tax, rather than an income tax. So if you are exempt from tax as an individual, you can enjoy exemption from an income tax. However, the focus is on the specific type of service or product that we think should be eligible for exemption. And so irrespective of who buys them, all right? So if that product or service is exempt from VAT, then everybody enjoys the exemption. And so, the other thinking along the line of that is why trying to provide for relief for this so-called vulnerable set of the economy, to say what are the type of services that looks like what they consume the most, where does the majority of the income goes to. And so if you think through that process, you will then see how services like health, like education, food items, even rent, so things that that a significant portion of the income of the low will go to, they were exempted. So whoever buys those services will enjoy that exemption. And then you also have the small businesses from the perspective of providing, lessening the burden, on SME taxpayer, to say, look, you will not be saddled with the burden or the responsibility of having to charge VAT or having to account for VAT. So it's driven from, how do we make it convenient? How do we make it easy? How do we lessen the burden in that particular, on that particular, from that angle? Then the other question on minimum wage, I think it's just reinforcing some of the things that we have said. And look, we're saying 800,000 naira may be too much, in some states, which is a fair argument to make. But in the current Finance Act, we already have exemption for minimum wage. And so the increase to 800,000 just attempt to raise the amount to target the current minimum wage of 70,000. Of course, 70,000 times 12 is 840. So like the Vice President said, but we know that some states, may not necessarily choose 70,000. We've heard that some states are considering 60, considering 65. So it was an attempt to kind of stay within the band of minimum wage. So maybe part of the recommendation will be, because we don't know what will happen in another, 1 year, maybe there's a minimum wage increase. So maybe the provision we should probably recommend is we insert, a minimum wage clause. Anybody earning below minimum wage should not be liable to tax, rather than, you know, an attempt to make it 800, 840, or, you know, or whatever number. There was a question on, you know, NRS and FRS. I didn't quite get the question, but I thought it was kind of reinforcing the comment I made earlier in terms of the change in the name from FRS to Nigerian Revenue Service. The idea is to make it a National Revenue Collection Agent, which, you know, all the state and all the tiers of government see as representing them rather than representing the federal government. And we should push more on how do we make the allocation and the distribution more equitable. So that's really where the argument is. There won't be so much of fight between state and federal if each state sees that by relinquishing certain part of my power to administer this thing locally, I won't be shortchanged. Who doesn't want free service for an extra amount of income? So I think it is making sure that the process is seen to be fairer and more equitable that will ensure that all the subnationals buy in. And then the last one on easy compliance, how do we promote ease of compliance? I think that's where the real work actually is, because we can say all that we needed to say. How do we ensure that we close the gap? We focus on where the real money is. We stop chasing people that should not be chased. I am hoping that with all of the innovation around, let's use technology, let's centralize as much as possible, let's do away with some nuisance taxes that is distracting attention and all of that, and focus on really where the money is and who is ideally supposed to pay, and letting data and technology power what we're going to be doing. Let's use intelligence, power what we're going to be doing. That's where the real work will be. That's where the administration comes in. We can have the finesse of laws. It is in the implementation that's really the big burden will be. So I think those are just my quick comments on the questions raised. If I didn't pick any, maybe other contributors can pick them.
Let others comment.
Okay, thank you very much, sir, for your comments. And Mr. Tolu, if you are there, we need your contributions within 5 minutes. Thank you, sir. Kindly unmute
Thank you very
yourself.
much, sir. It's actually Tolu Adigbe, not Adigbe. It's a Yoruba name. Okay, so thank you, Alaji. You've done such a wonderful job. I mean, everybody on the committee have done excellent job. The discussion has been robust. So I'll just quickly, to save our time, because most of the things I want to say I've written in the chat box. I've been responding. I've been very active on the chat box. But I'll just mention, address 2 or 3 issues. I will try and address the issue of the minimum tax. Try and address the issue of VAT attribution. May has spoken a lot about it, and I also try and respond to Mr. Ekene on the issue of composition of the team, and of course the issue of TET fund, which he mentioned, which I don't think anybody has responded to, but that's one of the pain points of the law. Some of the 2 key pain points that we have seen, the issue of the VAT attribution, and there's some federal government agencies like TET fund that they say will stop collecting taxes. So quickly, let me respond to the issue of minimum tax. Well, Yomi has spoken a lot about it, and I think I agree and share almost all his views. The Finance Act already exempts it. So what the committee tried to do was just to say, okay, let's bring up what's the new minimum wage, you know, so let's put it, so we're not changing anything. The states have not been collecting taxes on minimum wage earners in the last 2.5 years. So we are not losing anything. So the argument that, oh, states will lose money, we are currently not losing anything because we have not been collecting taxes on these people. However, there's an issue of equity. You cannot exempt minimum wage income earners, you know, from paying taxes. Then you are now collecting taxes from the informal sector, you know, because the informal sector, what they are making on a monthly basis is not also equal to the minimum wage usually. All the organizers, the bricklayers, the Okada riders, and all of that. So when we look at that issue of equity, then, and not to collect money from them. I mean, I used to be chairman of those Internal Revenue Service until August. And I know how much money we used to collect from Okada people and things like that. So the fact of the matter, we're collecting based on the 1% minimum tax. So I think that issue, or I will resolve it at the committee level. We should have at least a minimum tax of 0.5%. So, and that's what we propose, and that's what I've been sent. We even said it at committee level because I'm a member of the Presidential Fiscal Policy and Taxation Reform Committee. I was a member of the original committee of 80 people, and now we have the committee of wise men, 15 of us, responsible for the implementation. So we're actually the one that now took the law to the House of Assembly. Now we're the one busy running around Abuja now trying to get the law passed. So that's that. So because of equity, we have to consider putting a minimum tax. We can't exempt civil servants and other people who are under the payee regime and then collect informal sector taxes. So we should put something. That's one. Two. Now the argument that, states will lose revenue, they will lose revenue. Like I said, number one, you have not been collecting this revenue for the past 2 years. But number two, most importantly, all of us, we are tax professionals. We have tax tables. A lot of us are in charge of payroll for organizations. We have tax tables. Run these numbers using, recalibrate your tax table with this new proposal. You will see that you're actually going to be paying more taxes. That's the truth. The low-income earners will pay less. The high-income earners will pay more. That's what it has shown. We ran these numbers for those state civil servants because I have the payroll. And I ran it for them, the old tax table and the new tax table. The fact of the matter is that the state revenue service will make more money. So I don't think Ondo State is a basically civil service states like Osun, like Ekiti, like Enugu, like Ebonyi, like so many other states. The government is the largest employer of labor. So what you get from that aspect with what you determine to a significant extent the amount of money you make. So the fact of the matter is that if you run the numbers, because we are not emotional at committee level. You won't even be there if you're working with our daily. Everything is data. Show me anything you want to say, bring the data. So we run the numbers. So, and I encourage every other chairman of Internal Revenue Service here, anybody who is in charge of a payroll in their company, just run the numbers based on this new proposal, see what it comes out to be. So this is pure data that we can determine ourselves. So we actually make more money at state level. So that's number one for the tax. Now, to the issue of the tax attribution, Yomi has spoken a lot about it, and I've also written on the platform. The fact of the matter is that before now, head office effect very significant. I think Dr. Pam mentioned it. Lagos was getting all kinds of attribution, for things they did not do because they were just filing. Most companies are just filing one single tax returns, VAT returns, and then everything gets taken to Lagos. But the fact of the matter is that every bank, for people who work in banks, you know where your branches are. You know how much each branch is making. For FMCG, for all FMCG, you know where your depots are all over the country. You know where sales is being done. So they have these details. So what the new proposal is saying is this: everybody, please give us the details of your VAT returns. If you file a VAT returns, give us the location of consumption across the country. They already have the information. So it's not something new. So once we have that information, we can now attribute everything. They buy cement in Kano, in Kaduna. They are building houses there. Construction, massive construction, road infrastructure, all of those happening all over. So all those consumption, before now, the attribution of cement sales by Dangote, by Bua, everything has been going to Lagos. But now it's going to be going to those states where those consumptions are taking place. So it's so easy and straightforward. So that's what. Then the import duty, all VAT on imports usually go to Lagos. Now it's going to the central ports, which is going to be shared by everybody. So in all of this, when I heard that, this Lagos State, Lagos State is the biggest loser. And that's why at the committee level, the only state we engaged was Lagos. I'll give an example quickly. On consumption tax, hotel and event consumption tax, Lagos State was one of the first states that passed their law, and they are making billions from it. But now in our recommendation, we have told Lagos State that we have to stop collecting. Let these hotels and event centers only pay one tax, VAT. Lagos stop. You can imagine the amount of loss of revenue that will come to Lagos when all the event centers, all the one places, Lagos no longer pay consumption tax, they now only pay one. Because the whole base of the committee is that let's streamline all these taxes. Because the consumption tax and the residual matter does not mean all of us should be charging it. And that's one of the things that the committee is trying to do. So Lagos was the only one that we engaged, and Rivers and FCT, that look, we are going to lose massively in favor of all the states. Please bear with us. And they generously agreed. So when we now hear all these comments from people up north, I'm wondering, maybe we have not done enough in educating people. So that's that on VAT. Now, some chairman elitist consultants from Lagos, some of the committee members are, Alaji mentioned it too. But I don't know. I know I'm not an elitist consultant from Lagos. We have so many chairmen of Internal Revenue Service, on that list spread across. On the original one, for the committee of 80, we had about chairman of Internal Revenue Service, there about 12 of them. Then on the current committee, the 15 vice men, we have 6 chairmen of Internal Revenue Service. That's the highest representation in that small committee that's implementing all these reforms. So we're not elitist consultants from Lagos and from Ondo State. I mean, recently when I had to leave and now join the committee on a full-time basis so I can be representing the chairman where I cannot attend. Then finally, on TED Fund, well, you mentioned TED Fund and education. The fact of the matter is that what we're trying to do at the committee level is that, most of the funds going to TED Fund is an earmark tax, like so many earmark taxes in Nigeria. Right now, we have over 60 government agencies currently collecting various taxes and levies all over the country, from the same people. And what we're saying is that, how is it done in other climes? The way education is funded in other climes, thank God a lot of us here, we have children who have gone to school abroad. We know how it's done. A lot of people have dual citizenship and all of that. We have colleagues. It's through education loan. That's how universities are funded. So universities charge a fair price, and then the student gets education loan. Hey, that's number one. Number two is that the university comes up with endowments. We have rich people. I know one billionaire that just donated 1 billion to one school, even though that's university is related to him and all that. So universities come up with endowments and things like that. But in Nigeria, we came up with all these earmark taxes. These things are supposed to be temporary, fund education for a while we get out of the issues, the critical issues that we have in education. But in Nigeria, most committees or most initiatives that are supposed to be short-term basis end up becoming long-term. Now, instead of being an exception, they end up being the norm. That's why we have almost 60 government agencies collecting every law they want to pass in the National Assembly. They will put a revenue component in it. And what the committee is saying is that, okay, convert all of these to NEL-fund loans for student loans, and then we phase out the funding of NEL-fund, of TED Fund, from the education tax over a 6-year period. Now, the question is this: is it to talk like this? Will it work? That question is the reason why we have not made that change immediate. And we have said the change should take place over a 6-year period. So during that period, we can assess properly, is this working or is this not working? In any case, remember, there's development levy. The development levy that was introduced is what is now supposed to be collected globally. One fee instead of 60 different fees. Because all these agencies of government are saying, if I don't collect my own, how will I get it? I have issues with budget, with funding normally. How will I get it and all of that? So we now created the development levy, one levy, to be paid by all companies. With that development levy now, we can now start giving from that development levy to the various government agencies who already have tax components in their laws. So instead of companies paying to 60 people, they pay one, and then from that one is allocated to the various government agencies. So there's some form of order in what we're doing, and we streamline everything. So that's the idea, that's the thinking behind what we've done. Thank you very much. Thank you.
Thank you very much, sir. But before you go, Dr. Sayed mentioned on the issue of tax band and the rate from 0 to 800 and to 2,000, 2 million to 801 to 2.2 million. So why omission from that area? Can you please speak to us on that so that we can also take informed position? Thank you, sir. Hello, Mr. Tolu, are you still there?
Oh, sorry, I muted myself.
Okay,
Sorry.
sir.
Yes, I mean, I was trying to look at the tax band again and look at the gap. Well, the first 800 is 0%, then the next 2.2 million is 15%. I don't see what the gap is, because it's from 801 to 2.2, that is 15%. That's what it means.
Thank you very much for that clarification.
All right, sir.
Thank you very much. On this note, I think we're getting close to the end of this section. And before we go, I want to inform us that this is the first series of this webinar. We'll come again with another series when we must have taken all the discussions and various recommendations into consideration. On this note, I'll quickly invite the Registrar Chief Executive of our CI to give vote of thanks to all our paper presenters. Mr. Fulake Osho, over to you. RC, kindly unmute yourself and speak.
All right. Thank you so much, Dr. Ayodeji. Distinguished professional colleagues, it is my singular honor and pleasure on behalf of the 16th President, Mr. Samuel Agbeli, MNIFCTI. On his behalf, I wish to appreciate each and every one of you, our esteemed members, for the rapt attention paid during this webinar that has a direct impact on our national economy. In particular, I would like to thank the Vice President, Mr. Innocent Ohagwa, FCTI, who has given us his time and made valuable contributions as well. Then I would also like to thank our coordinating Dean of Tax Faculties, no other person than Dr. Mark Abani. Thank you so much, sir. Thank you for always answering us anytime we call upon you. Thank you. Then I would also like to appreciate our ever constant lead paper presenter, Mr. Aziz Alatoye, FCTI. Thank you so much, sir. Thank you for all you do. Then I want to use this opportunity to appreciate all our discussants. In no particular order, I'd like to appreciate our council member, Dr. Zaid CTI, the executive chairman of the Kano State EIRS. Thank you so much, sir. We appreciate you. I'd like to thank Mr. Yomi Olugbero, FCTI. Thank you so much for all you do for your institute. Many thanks to Mr. Jim Pamwires, FCTI, the executive chairman of Plateau IRS. Also, I'd like to appreciate Mr. Emmanuel Namani, FCTI, the executive chairman of the Enugu State IRS. Appreciation also to the ad hoc team on tax, the CITN ad hoc team on tax reforms. I appreciate in particular Mr. Tolu Adege. I hope I got it right. Thank you so much, sir. Then I will not forget my very own, the HOD of our Research and Technical Department, Dr. Ayodeji Adeyemi. Well done. I want to appreciate the ICT team, ably led by Mr. Nasiru Olubenga. You are doing well. Thank you so much. I want to appreciate the management team, Mrs. Oyerunke Ojo, Mrs. Sulaimon, and all of our staff that are on this call. Thank you so much. Then most importantly, I'd like to thank our dear members for all you do. And at this point, I'd like to encourage you all to continue to pay your subscriptions. The payment of your subscriptions enables us to organize more programs like this, and we would love to do more of it. So please and please pay your subscriptions. We also have other programs scheduled. And the first of it is the tax practice workshop that is scheduled to take place next week, Tuesday. Please make it a date with us at a very affordable rate of 10,000 naira. you can be a part of it. The team is building a modern day tax practice, rethinking principles and strategies. You can't afford to miss this. Then also we have the ICT seminar, the 4th edition, the seminar on ICT and taxation. And we have a lot of juicy topics laid out for that day. You can't afford to miss it. It's taking place November 26th, also virtually and also at a very affordable rate of 10,000 Naira. And all these programs have credit units attached to it. Then finally, I'd like to invite you all to the 2024 Annual Dinner and Awards that is scheduled to hold on Saturday, November 23, 2024 at Balmoral Convention Center at Sheraton Hotel. Please make it a date with us. Try and get your tickets. We have sent out a lot of notices to this effect. Please get your tickets. And if you have a lot of people coming with you, you can get your VIP table at an affordable rate. So on this note, I'd like to thank each and every one of you and wish you a wonderful good afternoon. Thank you.
Thank you very much, dear Elsie, for your votes of thanks. And you've heard it from her, our various program line up, you to be part of it, particularly the one coming on Tuesday. Please join us and learn from our tax experts that will be doing justice during the technical section. On this note, I'll draw the curtain of this program, and until I see you on Tuesday, I remain Dr. Adeyemi.
Thank you.